There we go. Turn the microphone on, Alpesh. Good evening, everyone. Let's start again. We are live. You should all be able to hear me. I'm just checking all the IT stuff. That all seems to be working. I thought it was going to be one of those days when the IT lets me down a bit, but it looks like you can all see me. Just let me know. Just put it into the box that you can all indeed see and hear me loud and clear. I've got a whole load of stuff to cover. Given that the markets have been falling sharply, given all the issues we have around trade wars and Brexit, I want to get right into it, okay? No messing around. I've been told by somebody Wi-Fi is slow. Hi, Sunny. I don't know if that's my Sunny out of South Africa. Okay, hello, everyone. Great. Everyone can hear me. Shaz, Harshad. Good. Let me know where you're from, and I'll give a wave and a hello to you as well. Like I said, I've got a whole bunch of new slides to show you, and given what's been happening with the markets, this is going to be really important. Not only that, we have got we've got a full house actually, and we've got a waiting list. So anyway, this is phenomenal that we've got so many turned up. I might even have to do another webinar later in the week, given the numbers and the interest that we have got. Let's just turn on the screen share so you can see my screen going forward as well. Just make sure that that comes on. Yes, indeed, you can. Great. Hello from, we've got everybody from London to Southall to Canada. Shaz in Canada, USA. I've got Sunny. Great. And everybody should be able to see and hear me as well. There might be a slight delay between the volume and the video for some of you. We have got full-on broadband. All right, here we go. US stocks. This is just a headline from the Financial Times today alone. US stocks extend sell-off and trade tensions. S&P drops more than 2%. Is this the big one? I'm going to show you in a second some data that I've got from Goldman Sachs, why I don't think this is the big one. And don't forget, given that they get to move the markets, we'll see why as well. Hi, Anthony from Henley, and we've got Daniel from Guildford. One of the things I'm going to show you right now, though, and we're going to return to this during the course of this webinar. This is what we've been doing with the euro. You've been following me on Twitter. You'll have seen this. You've been following me on the earlier webinars I gave last week and the week before. You will have seen this as well. And what you'll have seen is we've had this sell-off that we had to handle. Then we had the rise. Anywhere you see a green arrow, that tells us our system told us to buy. I'll go through the strategy a little bit later on, okay? And then we've had this long trade there. A red arrow means to go short. Notice how we don't ever get the bottoms all the time. We didn't get out. We don't have a crystal ball. We couldn't go short at the top of the market there or go long at the bottom. That's fine. Any good strategy should be able to pick up enough of a move, enough of a big fat move that you're able to capture the meat of it, even if you get in once it started. And these are higher probability moves. Once the move has already started, once the big banks have made it move, that's a higher probability move. That's a higher probability move than trying to bottom pick, okay? Or trying to go short at the top. Higher probability once you've had a bit of a move. This is a very high risk area here. This is a high probability trade over there. I'll explain all of that in more detail. I just want to show you that we're going to go through euro because it's Brexit time and US dollar during the course of this webinar, okay? One of the other major things was the Dow. We're going to go through is the Dow. And just to be absolutely clear, in case there was any doubt about the Dow, we are short the Dow. That should not be news to any of you, particularly, like I said, if you've been following the tweets and you've been following my webinars, then you will know that, okay? Now, like I said, we'll come back to this in the webinar. We will come back to why I like the 1 hour timeframes. We'll come back to how and why we know when to go short. What is it that the price patterns were doing just before that to suggest the market we should go short? What is it that this dotted line means? And it is not a reward target. What does the yellow stop loss? Why is it over there? Why is it not further away? Why is it not closer? How is it decided? And how can we do all of this so we're not screen slaves and we can do it all within just looking at the markets for 15 minutes a day before and after work, so we know exactly what to scan each one of these little windows, which we've got from here, all this live, free, real-time data. I'll say that again, free, live, real data. Many brokers offer it. I'll show you how to get your hands on it so you're not beholden to any one broker. Okay, that's all the information plus a whole load more, okay, that I'm going to go through today. So everything from UK stocks, European stocks, sterling, dollars, euros, currencies, gold, oil, the whole shebang. As you can imagine, a hell of a lot to go through. And not only that, given that US markets are moving lower, how do we make money out of the falls? Is it time to get out of our long trades? And what does this mean for currencies? Basically, how do we make money? Basically, how do we make money is what it's about. And this isn't the first time. Listen, I found this from 2016. Flash crash of pound baffles traders with algorithms. Two really important things I want you to notice with this. If you're going to learn to trade, if you're going to learn to make money from the markets, there's certain words you're going to need to know. First of all, this came from Bloomberg. So a source we can trust. Now, this is back from 2016, okay? What you're going to need to know is this. Baffles traders. What? Why should anything baffles traders? Nothing should baffle traders. Surely traders, the professional traders, know everything. They're always right. All they ever have is big winning trades. So if that's the case, sorry, I've got a sore throat, so I might occasionally have to take something for it. Okay? Why is anything baffling them? Yes, it does. Well, given that it baffles traders, how do you and I, regular people, let's say, how do we know where to make money? And finally, one other thing we're going to have to do, algorithms. Bloody hell, Alpesh, if all these algorithms and professional traders are baffled, how do you expect us to make any money? No wonder 80% of private investors lose money. Yes, we're going to have to deal with all of these, and then you're going to be able to decide through a little business plan I give you whether or not trading is even for you. And the great thing about this webinar is going to be, you're going to know at the end of it, can you make money? That's going to be a decision up to you. You're going to get a feeling for it based on a business plan. And if you decide, hey, trading's not for me, can't make money, that's fine. That's good. That's 90 minutes well spent. Okay? So don't worry about that. Hopefully what you're all going to say is, hey, I think I can make money from the markets. I like this. I want it to be a side business. I want it to be a side entrepreneurial venture. That's what I want. I want to build up your confidence through the education I'm going to give you as a professional trader myself. Okay? And let's be clear where I'm getting all my data from to where we are. Well, screen shares off. Wait a second. It's not my day for the... There we go. Turn that off and you should be able to see me. Two main sources of information. Well, several actually. One is some of the leading traders in the world. I'm going to use their information. How the hell do you have access to some of the leading traders in the world? Well, I met them. I met them for my book. I'm not plugging the book because it's 20 years old, and I'm going to give you the URL where you can download the best bits of it anyway. Okay, published by the Financial Times. Lessons in Trading Strategy from the World's Leading Traders, where I interviewed 10 of the world's leading traders. This is 20 years ago when I wanted to learn to trade. I thought I'd better meet the best traders in the world. So I did. I wrote a book to meet them. They became friends. They mentored me. So I'm going to get some of the information from the world's leading traders because I met them and they became my mentors. That then led me to write, basically, again, for the FT, for the Financial Times, so the most credible source in finance, an international bestseller. You can tell when a book's doing well because it's a second edition, big, fat, thick one, as you can see, called Trading Online. Again, it's old now. It's old, like me. So don't worry about it. I'm going to give you the URL where you can download the best bits of it. I'm going to give you all the training. So you're not just this webinar. It's all the ongoing stuff, and it's all free. It's all free I'm going to give you. Okay, so don't worry. All right? It's all free, so you can go away and you can say, wow, you know what? Alpesh Patel's webinars are great because he gives us so much free information, videos, ebooks, content to the best materials. And why'd you give it for free, Alpesh? Why'd you give it for free? Because somebody already paid for it. The Financial Times paid for it. All the people who bought the books paid for it. And where else am I going to get the information from? My 200 columns in the FT, my Diary of an Internet Trader columns. This is important for you to know because you need to know where's information coming from. We live in an era of fake news. So my 200 FT columns, guess what? The people who bought the paper, they paid for all that information. I'm going to give you the best bits in this webinar, my own experiences and expertise. And by the way, if you're Chinese, ni hao. That's my book in Mandarin. I'm off to published again by the FT. I'm off to China next month. So I might see you in Beijing or Hong Kong if hopefully the protests die down. Right, let's get on with more of this stuff. That's where the information comes from. That's why it's important to know. Some of you might say, I don't need to know where the information comes from, Alpesh. Of course you do. Of course it's incredibly important. All right. Now, next thing you need to know. Again, this is from a couple of years ago, let alone from today. Goldman Sachs, Deutsche Bank say pound plunge is just getting started. We've been having these plunges in the pound and the dollar for ages. They said the pound plunge is just getting beginning. They were wrong. They were wrong because guess what? It went up and now it's come back to the levels it was when they first wrote this a couple of years ago. The other thing is, listen, I'm going to tell you about real trading, not the bullshit you hear about these courses where people want to sell you $3,000 courses for a weekend and absolutely kill you as a result in terms of the costs and all the rest of it. What if I told you real traders don't use candlestick charts and they don't use price action? I'm going to show you what real traders do, all right? Because when I was learning to trade, I was taught by some of the world's leading traders what real traders really do. Now, it's going to blow your mind. What you're going to learn, like I said, one of the key sources is from the leading traders in the world. What you're going to learn is to make sure you're not one of the 80% who lose money. I'm also going to show you why people lose 50% of their money trading in the first year and then lose the rest of it in the second year. Yeah, they lose a fortune very quickly. And how to make trading stress-free. Now, this is really important. Because if you're going to trade alongside your day job, alongside looking after family, alongside looking after your kids and wanting to smell the roses at the weekend and not wanting to read the FT and the Economist and get a PhD in macroeconomics in order to trade the bloody market, let alone the fact that we're seeing falls in the US because of Donald Trump's trade wars, or you might argue Chinese reaction, you don't want to be adding to stress for your life because you're going to think to yourself, well, Alpesh, thanks very much. You taught me how to make a little bit extra money, but you know what? I'm in front of my screen 24/7. My wife and children hate me, assuming you're male. Okay, or female, it could be anything. Okay, but my wife and children hate me. And it's not worth it. My hourly rate of return isn't worth it. So we've got to make sure that the strategies and the plans I give you, just as I was given by some of the best traders in the world, they fit all that. And so I learned to trade without a silver spoon in my mouth. I was at university. I thought I really want to do this because I was training to be a lawyer. And as a lawyer, I knew I was guaranteed to be incredibly rich. And I thought, well, that's not going to be enough. I know I'm guaranteed to make lots of money as a lawyer, but that's not enough. I also want freedom. I want autonomy. I want fulfillment. I want to know that whatever I do, I get the fruits of all my labor. And that's why I got into trading. And that's why I thought I better meet the best people in the world at it if I'm going to do it, because it was the rest of my life after all. So I better meet the best in the world. I mean, I had no ambitions to be second best, obviously, or just mediocre. I don't want to do anything mediocre. So I'm just sharing that knowledge with you, as I have done in my Bloomberg shows and my FT newspapers and all the rest of it. And then 10 years after that, when I first met some of these leading traders, I had enough capital to set up my own hedge fund. And so I'm going to use some of that insights as well. Okay. More things we need to know. We need to know. And I asked people, I did a poll. I've done quite a few polls. And by the way, there's a poll up here. Will the Dow end up higher? I'm just going to end that poll right now. Okay. 54% said yes. Well, given what's been happening today, by the end of 2019, that might be that's actually not that's not a bad thing to say. 46% no. I'll share the results of the polls as we go through on all of this. Here's another important one I really want to share with everybody. And it keeps it interactive, doesn't it? Keeps life a bit more interesting when we're doing it that way across. Excuse my throat. All right. When we've asked and polled people, what are the reasons you think you can't make it in trading? Some have said not enough money. So I'm going to show you in this webinar, what's the least amount of money we can start with and what can we expect to earn, okay, as we progress. So that's an important thing you all said you wanted to learn. Also, people said not enough time. So I'm going to show you how not to be a screen slave, how to set up your screen like this, okay, so you can scan it for trades, 15 minutes before and after work, and we're going to look at, and I want you to write this down. Write down the number 15. Write down the number 1. I'm going to look for one quality trade a day. I'm going to tell you what to look for, what time frames to look for, and how you make sure you have a good, diverse range of products you're looking at. So you've always got opportunities. So you're looking at some currencies, some indices, because you don't care where you make your money as long as you're making money. That's a proper trader, okay? You got the DAX, you got the Dow. Of course, the Dow and the DAX are slightly correlated. You got Facebook, and of course, that's correlated to some extent. But the euro isn't really correlated to the Dow. When you look at it, it's not that correlated, okay? So we're going to make sure that we've got a wide range of relatively uncorrelated. I've just picked a few there, but there's actually a lot more you could pick. I'll give you some of my favorites as we progress in this webinar. All right, we're already 17 minutes into it, and I'm only on slide number, can't see the number, 7. So I've got to speed it up a bit. This is today, CNBC, Dow plummets 750 points. How are we going to make money from that? Because anything that happens in the markets, your attitude should be, how am I going to make money? And you might think, well, that's obvious, Alpesh. The way to make money is we'll go short the Dow. How did you know that the headlines have not already announced everything? So like I said earlier, if you see the red down arrow, that means our strategy told us that there was an increased probability of a downward move. All right. So all of that being the case, how do we know when we should buy, when we should sell. Because anybody can look at these headlines, but what about tomorrow and the day after and the day after that? We don't want to be screen slaves. We don't want to be just trying to gamble around news. We do not, when the Dow plummets like this and we can foresee it, trying to get into a trade before a big move happens, because that's too much like gambling. If you want to gamble, go to Ladbrokes, okay? And I do believe at the moment, with what's happening with Donald Trump and the volatility he's given us in Brexit, this is a lifetime opportunity. That's the first thing. And I also think it's a great opportunity as trading to have a side income or a side career. A lot of people are looking for that nowadays. They want to learn something, an entrepreneur, learn something which earns them money alongside their day jobs or in their retirement. And this is really important and critical that I tell you this, because I've got to fit it into a bigger picture so you understand I know what you're doing and what you're going through. The reason it's really important that you understand trading should be looked at as an entrepreneurial venture is because you'll be more business-like, and I'll give you a business plan in this webinar. But it also means, what it also means is as you go through this, you will have the right attitude to it. And it's a great entrepreneurial venture. And write that down on that piece of paper I told you, entrepreneurship, because it's the greatest one in the world, because you don't need a factory, you don't need an office, you don't need staff. So your overheads are very limited. And that's very important when you're mitigating risk in any business, to limit your overheads, okay? This is Bloomberg headline today, China retaliation 11 on a scale of 1 to 10. Wall Street warns. All right, stocks head for worst rout 2019. So which stocks do I like at the moment, given what's happened? I'm going to show you that in just a second, which ones I like. And as I've already said with the Dow, this is time to profit. Okay, so I'm going to show you how, when you've got this much noise, this much going on in the headlines, okay, how do you then still trade calmly? How do you keep your calm, Alpesh? How do you know what to trade? How do you know it's not too late? Has Sterling already fallen? Has the Dow already fallen? So much. Now should you be buying? What if it goes lower? How do we keep our calm, cool, and collected? So we see these headlines. Actually, we don't worry, okay? And think, oh, I should do this. We don't even need to read them. All trading will come down to this. This is what I'm going to show you. All trading is going to come down to this. Incidentally, 64% of you think it'll be hard, no deal Brexit. So do I. This is not a political comment. You might say, well, Alpesh, obviously that means, I don't care. All I'm telling you is just, I think it's going to be a hard no deal Brexit. Not because I necessarily want one, but because I think that's what it looks like is going to happen. All right. And 64% of you seem to agree on that one as well. Let's put another poll in to that as well. Okay, this is all trading is. Now, I want you to understand, we're going to look at just one type of trading. Why? There's a million ways you could trade. There's a million ways. There's no point trying to look at all of them, okay? Let's just focus on what's more suited to private investors such as yourselves, who have certain key disadvantages, such as, unlike Goldman Sachs, you don't have trillions of dollars where you can move the market. Unlike Goldman Sachs, you don't have a trillion analysts who can forecast what's going to happen, all right? And you don't have a crystal ball, neither do I. All right, so we're both in the same position. That being the case, we want to look at certain types of trading, right? And we're going to narrow it down. We're going to narrow it down into this particular type of trend. We're going to look, we've got to make, you, me, everybody else, like the billionaires have two decisions to make: when to buy, when to sell. Incidentally, this is Facebook, all right? This is Facebook. Now, let me tell you something about Facebook, all right? You, me, and everybody else see the same prices on Facebook right now. Facebook's trading at about $180. You can check it, Google it right now if you wish. Roughly $180. Depending on which broker you use, some might be selling it to you at $181, others might sell you it at $179, right? Roughly, it's about $180, spot 73 cents, right? That's not the point. The point is this. You, me, everybody else, the difference between rich and poor for any trader is basically when to buy, when to sell. There's only two decisions you ever make in trading: when to buy, when to sell. They're the only two. So how come, looking at this screen, and you've only got two decisions to make: do I buy or do I sell? How come 80% lose money? And also, actually, one question to ask is, bloody hell, it sounds so simple. How come everybody isn't rich? Yeah, and they're not. All right. So we're going to convert this into, right, when do we buy, when do we sell? We're going to really simplify this stuff. Now, one thing I did say to you in the emails I've sent you all with regards to things like Facebook, many of you will have heard, and you've heard me say it time and time again, I have long-term holdings in Facebook, Google, Apple, the tech stocks, okay? Plus a whole bunch of others, which I'm going to show you in a second what I like and why I like them. Now, just go to stocks for a second. So this is Facebook. We are short Facebook at the moment. What does that mean? We sold it at this level in anticipation, making profits as the price fell. Hang on, Alpesh, I thought you said you like it. Yes, this is the 30-minute bar. The reason is, let's look at the long-term holding on no, where's it gone? There it is. That's the weekly chart on Facebook, okay? That's from January 2019. That's a buy from long term. So long term, we've been holding Facebook for the long term, not to do with anything to do with the charts, but just because we've been holding it for donkeys. The point is, if you're holding something for the long term that you really like Apple or Facebook or Google, and by long term, I mean until my children's children. I mean forever. Okay, that's what I mean. I mean Warren Buffett long term, forever. Then I have no problem shorting it whenever I get the opportunity in the short term like this, selling it. Those of you who options traders, you'll know about writing calls against a stock. In fact, that's all we're doing. We're just earning income off our holdings. A lot of long-term fund managers do this as well. What that means is my long-term holding of Facebook is paid for. It's free. I basically got free because I took the profits from the short trades like this that we've had today. That's from, well, today, from the 2nd of August till the 5th, it's just been one way down traffic anyway, from 100 and, what were we, roughly 191 to 180. That's $11. That's been a killing. That's been a rout, and you've seen it in my tweets, and you've seen it in my other webinars that we've given. What we do from that is then take the profit and just buy more Facebook stock in the future. Well, actually, just pay down our existing holdings anyway, or buy something else with it. The point is, that is a strategy. That is it works really well because you end up with keeping capital and building assets. You build assets from market falls. What? You get assets when prices are falling? What the hell, Alpesh? Yes, that's a clever way, a smart way of using your capital. We'll come back to some of that stuff. Again, like I said, we are on slide 13. We're on slide 13. Let's do a bit more. Cambridge University said, I'm going to incorporate some of this stuff for you guys as well. Cambridge University said that gut feelings help make more successful financial traders. What the hell, Alpesh? Yeah, so I'm going to use some of the academic research to feed into what I'm going to teach you. So I'm not just using the stuff from the world's leading traders, as I already explained. I'm not just using it from all my books, my own experience and expertise. I want to make sure you've got information from absolutely everywhere and cutting edge. So not just from the FT and my columns that I've written, from my books, from the leading, but also from the leading academic research coming out right now and at the moment. All right. So how the hell do we get those gut feelings? That's one thing that we're going to need to develop. And I'm going to also show you how we avoid some of the biggest problems like this. And you guys know this. You guys, you know, any of you, by the way, feel free to put it into the chat box. Any of you paid those stupid courses, you know, the ones that end with academy or institute or trading college or trading university, you know, have this trading university and all of that. That, you know, the ones where you pay $3,000 and then they hit you up for $5,000 and then $10,000 for a weekend away and all this bullshit. You know, the ones where they tell you with your losing trades, oh, just leave it open, it'll come back. And with your profitable ones, take it. So they can say to you, oh, look, you were right 8 times out of 10. This is what they're doing. It's a well-known scam. It's a well-known problem private investors face. We're going to get away from that problem. We're also going to get away from this guy. Okay, it's again from those courses. Feel free to put it in the chat box. Yes, I know, Andre. Feel free to put into the chat box. I'm looking for water. Boy hasn't got water. Okay, feel free to put in the chat box any of the names you want to name. Robin has said it as well, far too often. All right. Since we're talking about Brexit and what's happening, this is, let me tell you the humble truth. Okay, this is my team outside Downing Street. There we are. I wish I could give you an insight and say, listen, guys, shh, I really know what's going to happen. I don't. Nobody does. Nobody's got a crystal ball. We're going to trade in a way without crystal ball. I don't have inside information. I'm going to tell you now, live on air. I don't have. That should not come as a surprise to you. I don't have inside information. You might have seen, if I had you might have seen me on the BBC talking about Amazon and tech stocks, and I've just talked about Facebook. Okay, you often see me on TV. I'll tell you what I talk about when I'm on air. All right, is exactly the stuff that I'm going to show you now. All right, I use the trading methodology I have here to explain where I think markets are going to go. And I've been doing that for 20 years. And for 20 years, they keep getting me back on TV because I'm somewhat accurate. All right, I don't have a crystal ball to be right all the time. And that's good news for all of us. Because guess what, guys? You don't need to be right all the time in order to make money trading. Isn't that a bloody relief? Isn't that a relief? Like I said, I do not have inside information for you. So if you're looking for it, we've beaten the Downing Street many times. Don't have it from that. Trading was, for me, it was banging my head against the desk for a very long period of time until, like I said, it was the world's leading traders. It was them who taught me. I didn't work it out myself. They taught me, and I'm just going to regurgitate what they taught me. Quick checklist. Please make sure you've done all of this. Please make sure you've done all of this. Get that notepad, write down making money, because we're here to make money. As one of my mentors, David Kite, from my book, Mind of a Trader, wrote, turn off the TV, close the doors, and grab some water. All right. We're going to make sure during the course of this webinar, Greg Stecker and Matt, is there really something called Mike Baghdadi? You're kidding me, yeah? All right, Sonny, thank you. Sonny told me the Dow's down 825. We're happy with that. Sonny, keep letting me know what it's down. Let me tell you what we are on the Dow at the moment. Look, guys, look, you don't often get a Dow crash every time I've got a webinar. So don't be led into thinking, wow, what precision timing, Alpesh. But the Dow's at the lowest point it's been. We've been short since, well, initially today, but even before that, as you saw at the last webinar on the 2nd, that then gives us another signal to go short, and that's just accelerated. So that's where we are. Thanks, Sonny. Sonny, just let me know, are you my cousin Sonny or another Sonny? I just need to know. Andre, Mike, that is the new leader of the Turtle Track. Okay, I've not heard of it. But seriously, is his real name Mike Daddy? I don't believe it. Yeah, exactly. I don't know who this complete currency guy is. You know, the thing is, what you got to remember with any of these guys is, oh, sorry, okay, so another study. Ask them, where's your FCA regulation? Where's your hedge fund? And by hedge fund, I mean everybody goes around claiming they are, right? Ask them, who's the administrator? Who's the custodian bank? Right? They won't have a clue what you're talking about. Who's the LPs in your GP structure? They'll go, what's that? Okay, because these guys are idiots, and they want to charge you tons for all of this. So don't do it. Don't fall for it. So we're going to keep an eye on this. Thank you, Sonny, for keeping me updated on that, as will my assistant. She'll also keep me updated on what's happening with this, and we'll come back to the DAX. I think it's going to be an exciting webinar because normally, you know, the markets are just like, but this one's great. We're going to make sure during the course of this, we don't have any subscriptions. We don't want to pay. Listen to this. Listen to me. I used to say this in my Financial Times columns because my job is to save you money. So I do not want you paying for anything every day, every week, every month. No price data, or every year. No price datas and none of these subscriptions to watch somebody's computer screen, or newsletter subscriptions. None of it. And we're not going to go for the latest fad, you know, price action. That seems to be the fad of the day. Write down any other fads you're hearing at the moment. And look, technicals, I love technicals. The only problem with technicals is that, and listen, I've written books on technicals. Oh, you can't see it there. Let me just put this back on. All right. I've written the book. I've written the books on technical analysis. There's going to be loads of technicals in all of my book. My point is, there isn't anybody who's more of a bloody expert on technicals than I am. There you go. Loads of technical charts. There you go. Alpeshpatel, right? Written 18 books on bloody technicals, right? Even in Mandarin, it's been translated, my technicals. My point to you is this: they don't work often enough anymore. They used to when I used to write the books 20 odd years ago, all right? But now, I'm sorry, guys, they don't work often enough, accurate enough, right? So we're going to use different methodologies, which is what you'd want, all right? I'm going to be Santa Claus, going to give you lots of information. In fact, I'm going to start giving you the lots of information now. Here it is. If you want to see, by the way, if you want to get my latest newsletter, it's completely free. Go to alpeshpatel.com. This is a chart of Europe's equity valuations. We were already, before the market moves, relatively cheap, and that's partly because of Brexit. So I'm not worried about these downward moves in the markets at the moment. Don't worry about this part. If you go to alpeshpatel.com, you'll see this. This is Goldman Sachs. This is what Goldman Sachs said when they analyzed bear markets for the last 50 odd years. Thank you, Sonny, saying the Dow's fallen even more. Yes, it has. It's falling even further. And so our shorts are making, there you go. You can see it down here. Oops, no, you can't because I've got to, sorry, guys, you know what? I forgot to screenshot all of that. Let me just go back. A bit of a ninny today. I'm a bit of a ninny. Let me go back to that. I'm going to, so there you go. You can see it's falling short. You guys are making me money. You guys are making me money right now because the shorts there, you saw all my tweets and, like I said, the webinars, all of this. So that's from before. We're going to come back to it. Thank you. This is what, so alpeshpatel.com, it's free. All right, you've got this data. I love giving this kind of data because I've got it. Why should I not share it with? This is from Goldman Sachs. They analyzed a whole bunch of market moves, bear market moves, and given that how much the markets are falling down at the moment, right as we speak, which means there's money to be made, and they said bear moves tend to move like this. They don't just go up and then down. All right, I think we're here. I think we're closer to this. All right, so I think we're going to recover and then go lower, but I'm not really worried, even if we are here instead, and we're likely to just drop, which I don't think we are, because we can make moves from downward moves in any event. Alpeshpatel.com, like I said. And in this, you're also going to see, the stocks that have got my highest valuation growth ratings. Okay, I'm not going to go through all of these here now because you can look at this in your own time on alpeshpatel.com. There, you'll find it there. Wow, the Dow's are really crashing and tanking. I'm a happy bunny because it's 875 now. It says Sunny. Thank you, Sunny. All right, so you'll be able to see this on there in any event. All right, and you'll go to see my US stocks as well, which ones I like out of the US markets and which have got the highest ratings out there. Sorry, that's UK and US, which ones I like as well. You'll also get to see a whole load of stuff that I do in my spare time, like conferences that I hold and awards that I win and all sorts of stuff each month. Anyway, don't worry about that. That's on alpeshpatel.com. But I also want it on there. I've uploaded the Goldman Sachs report, okay, on there as well. So you can grab the Goldman Sachs report on alpeshpatel.com. It's completely free. I've uploaded it for you guys. I know I emailed a whole bunch of you, but it's just so in case any of you want it. And the ebooks are there as well. All good traders, all good trading performance will end up looking like this. Okay. James has said you're going at 100 miles per hour. There are newbies here. I'll slow down a bit, James. I'll slow down a bit. You're absolutely right, James. There are newbies, and this is geared towards newbies. And I'll explain all of this. Just take it in a bit, and then remember that as a newbie, you'll have to go through some of the repeats, and I'll go through the repeats. All good trading performance, and this is from one of the world's leading traders, Bill Lipschutz. This is his performance of his fund. Okay, and it shows the number of months and the percentage gain he got in those months. All right, the number of months he got a 0 to 1% gain was about 14 months. All right, note it. So how come these people are rich? How come, James, for instance, people like this are so rich? And the trick is they never have, look at this chart, they never have big losing months. Whilst they have lots of small losing months and small winning months, they never have big losing months and they have a few big winning months. So your questions you're going to ask is, how come Alpesh they don't just have big winning months? How come, if they're so clever and the best traders in the world, all their trades aren't winning all the time? I wish that was the case. Because if that was the case, we'd all be super rich. Okay, but that isn't the case. You don't just, no matter how good you are as a trader, you don't just have big wins. If you did, you'd corner the market in money. Every trade we enter into, we think it's going to be a big win. Sometimes it doesn't work out that way. Donald Trump does a tweet, market moves against us. So we have some small wins, and we have, as well as small wins, we have some small losses. And the small wins wipe out the small losses. So where's all the money coming from? Where's the yachts and the Rolls Royces and the Ferraris coming from? It's by ensuring we never have big losses. So in our trading strategy, I'm going to show you how we make sure we never have big losses. And by making sure occasionally when we get the trade in our favor and it's just making us money, like the Dow trade, which I'll show you now, like the Dow trade. And I'll take my picture off because it'll make the screen a bit bigger, I believe. Just let me know if that's the case. It's better if you're not seeing me. Just let me know if it's easier and better for you if you're not seeing me. And if the screen's bigger, then that'll be that's better for everyone. Okay, so here, like the Dow trade, which is just falling, when it goes in our favor and we have the opportunity to make an absolute killing, as this is, not every trade's like this, I wish it was, and a big win, then that's what allows us to have a great month like an August. Okay, that's great for us. It's going to be a great August. How do I know it's going to be a great August? Because we just bloody did this. I mean, look at that. Let alone what's been happening with the pound, but I'm going to show you some of the other trades as well. Thank you, Jacqueline. I will pop back in and over again and in and out. Okay, so I want to show you the bigger picture of what we're aiming for. We're going to aim for some big wins like that when we get them, and not all trades are like that. And I want you to remember these numbers and write this down. A coin is right 50-50, so write down 50-50. God is right 10 times out of 10. We're not going to be right 10 times out of 10 or even 9 or 8. we're just going to be a bit better than a coin. That's 6 or 7 times out of 10. But Alpesh, why aren't we going to be right all the time? Well, because I wish we could, but it's not the case. The best traders told me, no, you're just trying to be a bit better than a coin, but I'll show you in the business plan how that still makes you ample money. But will it make us enough money? I know some of you are from different parts. Thank you, Gordon. It's very kind. I know some of you are from different parts of the world, like California and Canada. So whether you're using American dollars, New Zealand dollars, or Canadian dollars, or whatever dollars you're using, or pounds sterling, you can translate this language. Now, by the way, I'm not recommending this broker. I don't know this broker. I've never used this broker. This is just some data that I found when I was writing one of my books. And the reason I was writing this book is I wanted to research I wanted to get data from brokers to see if what their 20% of their winning clients are doing is the same as what hedge fund managers do, and whether their 80% losing clients are doing the obviously wrong things. And so when we're going through this research for this book, and it was published a couple of years ago and launched by Barclays Bank, what we found was this piece of data, which was quite interesting, I thought. Okay, profit recorded by top trader, £1 million. I know you all think you're all going to be that guy. You're not. You're not. That's like the lottery winner. Statistically, somebody's going to be top dog just by chance. For all we know, this guy was trading with $10 million and made just a 10% return. Okay, so forget that. What's more interesting is average profit from top 100 spreadex traders was nearly £100,000. You're not even going for that. I'm sorry, guys. I've got bad news for you. You're not going for that. I'm going to start you off as, where's he gone? Where's he gone? I've forgotten his name. Anyway, James said, we're beginners. I'm going to start everybody off. I don't care how experienced a trader you are. Our goal in this webinar is going to be, let's focus on £500 or dollars per month. Why? Well, sure, some months you'll make more. You keep that for the months in which you make less so that you can iron it out and you can average out at about 500. If we can average at 500 a month, you're not guaranteed that. You won't make that every month. Some months you make more, some months you make less. Okay. But if we can average it out, then we've got skills. If we've got the skills to make 500, which is a baby step, so easier to learn, easier to succeed psychologically, we don't get put off trading because we haven't crashed and blown up because we haven't taken too much risk whilst we were learning. Okay. Then if we've learned that, if we've got 500, then we've got the skills to make 1,000. If you've got the skills to make 1,000, you've got the skills to make 2,000. Right? Another way of what I'm saying to you is your trading is, by the time you finish with me, will look like this. Out of 100 trades, if you are profitable and you follow what I'm saying, your trading will look like this. We will make sure you have no big losses, and I will prove to you it'll be impossible to have no big losses. Okay? I'm afraid you will have some losses. They'll be small though. You will have some wins. Sadly, there'll be some small wins. I wish they were all big wins. I would need a crystal ball for that to be the case. Every leading trader in the world wishes it. It doesn't happen. This is where you'll actually make all your money. Just look at the statistics on this. It'll be from the 20% of trades, the minority of trades, which are big wins. Now think about it. Statistically, that has to be the case. If that wasn't the case, everybody'd be rich. If a few people could crack the code and make every single forecast correct, do you not think they would corner the market in money and the rest of us have none? Of course they would. Life isn't like that, okay? So we're going to try set it up. You know what happens at the moment with private investors? And put your hand up if this is you. Oh, by the way, I'll just end the poll on this. Will the FTSE be higher by the end of 2019? No, 58% say, presumably because of Brexit. But I just want to share the details with you. I'm not going to give a view on it at the moment. I will shortly. Okay? So, you know what happens to most private investors at the moment? Their trading also looks exactly. I bet you, put your hands up. If your trading results out of 100 trades look just like this, except your big losses would be up here. You'd have big losses, maybe 20%. That's what would happen. Okay, right? So in one sense, hey Alpesh, doesn't that mean that all you're really going to do with us is make sure we get rid of big losses? Well, actually, in one sense, it is. It is what I'm simply trying to do. So if I get rid of your big losses, let me ask you, put it this way. If I could get rid of your big losses, would you be profitable? Yeah? You're going to go, yeah, actually, we would. We never thought of it like that. Think of me like a personal trainer. Think of me like a management consultant to you. That's all it is. That's all I am. That's all I'm doing. Okay? I'm just taking what you've already got and removing some of it so that all of a sudden it works. By the way, Disney, which I've been banging on about, okay, this is why I trade the way I trade, which is this. Somebody asked me in the last webinar, I said, oh, what level should we enter a certain trade? I said, listen, and this proves it. Look, We had a short trade in Disney, which was all the way on 15th of July, just before my birthday. We then had on the 24th of July a long, okay, in Disney. And then now, all of a sudden, from the start of this month, we've had a short, okay, in Disney. How can I possibly have said to you, oh yeah, you should go long at this level or short at this level? I did not know until I saw this. But here's what's interesting. Here's what's interesting. There was the opportunity to profit from this. There was the opportunity to profit from this and the opportunity to profit from this without me having to forecast and predict that it's going to go down, then go up, then go down. We were riding the trend and the momentum, and that's the type of trading we're going to do throughout this because it's calm, cool, collected, and it's also what some of the billionaires do and the billion-dollar hedge funds do, and we're just going to copy that, okay? We are not, and it's really difficult for people to understand this, we are not in the business of forecasting. We are not in the business of gambling around news. We are not in the business of trying to foresee the future, because if we were, we would not have seen that Disney was going to fall there. What we are able to say is, oh, it's gone down. All right. All right. So we're going to look to do this. Thanks, James. I'm going to explain how you can do that. And risk reward is dangerous. You see, a lot of people say to me, oh, Alpesh, what's your risk reward ratio? And I say to them, you know what? It's the worst thing that you could say. And I'll tell you why. Right. When people say, let me zoom in. This is an important lesson. I'm just going to go off on one for a second. Right, this is zoomed in euro, US dollar. We're talking Brexit and everything else, and we're talking US markets. And so probably the best thing, if you want to combine both Brexit and that, is euro dollar. That was where we got the signal to buy into it. Let me zoom out a second. All right, where's it gone? There it is. All right, so we'll look in a second. What was the price doing there? That gave us that clue. Okay, so that told us to buy in. Now look at this. It shot up and up and up. Why would I want at that entry point, which is this green line, that green arrow, means this is the buy point, which is the green line, to make it absolutely so you can't bloody miss it, okay? So our computer system generates this for us on the trading rules, which I'll give you in a second. We have 10 algorithms in our hedge fund. This is the oldest and earliest, which Bill Lipschutz taught me the strategy, which is when I was a private investor. It's the easiest. It's my longest serving one. It's the only one I'm going to show you on this webinar because it's the easiest one to explain, and it's what he taught me, so it doesn't belong to me anyway. All right, now, that was the buy point, that green arrow. The point is this: why would I put a reward target here? Why would I cap my profits when look what happened? It went up and up and up. I would have missed out on a massive gain. Not only that, the best traders in the world, not only do they not cap their profits, what they do is, and write this down, winners add to winners. When they've got a winning position, i.e. something where the price, they enter here and it goes into profit and it's at this point, so they've got some profits in their pocket, let's say $1,000, they double down, so that they've now got two positions open because they risk some of the profits to make even more profits. They compound them, they leverage them, all right? And it also means they could have initially started small, knowing that if it went the wrong way, they'd have a small loss, but if it went the right way, they can double down anyway and therefore make more money. That's just one of the techniques I'll teach you. So write it down, winners add to winners. We never use risk reward ratios because that will just mean that you're capping your profits. If you found if you found oil in your back garden, would you then just cap it and say, well, I found a bit, darling, let's go look for some more of some elsewhere because I just found this and we'll just cap it? Of course you wouldn't. How are you going to get those big winning months if when you do hit something like this, you decide to cap your return? Absolutely awful. All right. None of the leading traders, and I'll show you in a second, ever do that. Right, so let me go back. Oh, what have I done there? Euro, it was the euro trade, wasn't it? Euro, US dollar. I have to bloody try and find that now because I've closed it incorrectly. There we go. Okay, it's back. So what will happen instead, what we're going to do instead is something which makes us money. Like I said, we're also not going to be just constantly reading the newspapers like this because I don't want any of you having to read something as boring as what the European Central Bank is doing, all right, or what Draghi is doing, because it's too much like gambling, okay? They just don't do that, all right? The most successful traders in the world do not spend their time reading Bloomberg or FT. I'm sorry, but I got to tell you, I've got to tell you, they just don't. And if you want proof of that, it's in the Financial Times published book. But like I said, go to alpeshpatel.com. You'll see all of it for free. You'll see the videos and all the explaining that they don't. I'm not going to go through the 4 different types of trading, losing trader. What I am going to show you is this. All trading is this. Let's say the price is at 100 and you think it might go to 120. Obviously, if it goes higher, you will add to that winning position. And let's say you put a stop loss at 80. A coin toss is right 50-50. If you did 100 of those trades, feel free to experiment. 50 of those will rise, okay, to 20, and you'll make $1,000. 50 will fall, and you'll make a net return of 0, my friends. So you'll go, oh, thanks, Alpesh. You just taught us a new way to make nothing with a lot of effort. All trading is, we're going to try and go from a coin, which is 50-50 and random chance, to this. 60-40. But Alpesh, why are we not getting to 100% right? You've written all these books, you're on the BBC, you've got a hedge fund. Why are you not telling us how we're going to be right every single time with your secret recipe? Because the leading traders aren't right. On everything they taught me, they weren't right all the time. All right? They're just 60-40. That's it. Obviously, sometimes we'll have a winning streak. We might be right 10 times out of 10. That's called a winning streak, just like a coin can be heads 10 times out of 10. Right? All trading's going to be broken down also into Selma. Stop losses, where do we put those? Entry, limit order, i.e. how do we know when to take a profit? Trading psychology. Remember I just showed you a chart where the price went up, then went down, went up. How do you psychologically keep calm during that? After all, 1 minute you're going long, the next minute you've got to convince yourself that you should go short. This is our Facebook trade. Facebook is free for us right now. Why is it free for us? Because we've been shorting the hell out of it for so long, and anybody following my webinars knows this. Every time it comes up, I say, hey, we're short Facebook again. That the long-term position has been more than paid for. And I don't want to buy more long-term Facebook because I've got ample. Okay, I'd rather buy some other stocks. If you want to know which ones, like I said, alpeshpatel.com has it. But Gobant is one. I've been absolutely in love with this company. How much money do we put into a trade? And when do we know when winners add to winners? How do we know when to add to our winning position? Okay, when to add to our winning position. Also, want to really quickly recap. Okay, bad education. When anybody shows you all of these screens, oh, you got to have lots of screens, blah 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 blah, or what they want you to sit in front of the screen. Usually, they want to sell you a subscription to something. Don't buy subscriptions. Or bad education. Oh, Japanese candlesticks and Elliott waves. I've got nothing against them. It's just that they're not accurate enough, often enough. Okay, alpeshpatel.com. That's the URL. Okay, it's all in there, and you'll find it all in there. And you know what? I don't want any of you to think success is overnight. Hanging out with the royals and all of that, known for the area of trading that I'm in and financial technology that I'm in, that did not happen overnight. All right. So I want you all to know that none of this happened overnight. It took ages. I'm just trying to use all my experience and the experience of the best traders in the world to compress your time to it. And what I want to show you right now, some of the slides from one of the world's biggest hedge funds. Now, I stole these slides, all right? Are you listening to me? This is, God forbid I ever stand to be prime minister, because they'll go, what? The guy's a thief. I stole these slides from Man AHL, London-based quant hedge fund, about 19 billion. They demystify how they make money. Why would hedge funds like you, Alpesh, or like Man AHL tell people how they make money? The reason is we have to. We have to. Two reasons. When I go, the investors in our hedge fund are pension funds like Aegon and AXA, massive pension funds. Aegon sponsors Wimbledon, by the way. Okay, they're invested in our hedge fund. They're high net worth individuals like the founder of New Look and the founder of Cobra Beer, Lord Billamoria, founder of New Look, Tom Singh. Okay, people like this, high net worth and institutions. They ask us, okay, how do you make money? So you might say, well, if they ask you, why don't they just do it themselves? Well, I asked my gardener, how do you grow roses? And he goes, you put this much manure in it, and then you do this, Alpesh. I say to him, good, mate, you do it. I'll pay you. Okay? Just because somebody tells you how to do something doesn't mean you're going to do it. But what I want you to know is this. Strategies like this are to a penny. If you don't believe me, go to Oxford University Maths Department and ask any one of the poor academics to give you a strategy. They'll give you strategies all day long. The scarce resource is not trading strategies. The scarce resource is capital, how to get money behind the strategy, and we'll come to that later. Initially, I know everybody's got very little money, so that's why we're looking at a target of just making $500 a month. Okay, so we're going to start with small money, and if you start with small money, then you can only make $500 a month because you don't want to take too much risk. Okay, and then if you can learn to make 500, you can make 1,000. If you can make 1,000, you can make 2. Once you start making consistent profits, you can then go to friends and family and say, hey, will you give me some capital? As I did. And you build up your capital base. That's a separate issue. We'll do that in the Q&A if you really want to know how to raise capital. So this is from Man AHL. This is literally their slide, and they're explaining how they trade. And they say they might look at a price trend like this, and then they see it go up a little bit, and they've got to decide today, okay, they've got to decide, right, what do we do now? Do we go long? i.e. do we buy in the expectation the prices are going to rise, so we sell at a higher price, or do we go short, S for short, which means we sell at a high price in the expectation the prices are going to fall, and therefore we buy cheaper later. All profits are the buy price, the sell price minus the buy price equals profits, okay, as you know. Whatever, and that's same whether you're selling tomatoes or anything else. Sell price minus buy price equals profits. It doesn't matter which order you sell in and which order you buy in. That's the formula for profits, as you all know. Buy low, sell high, or sell high, buy low. Same difference, right? So what did they do as they're explaining this? And obviously they're explaining it in oversimple terms. I'm going to explain it in how we do it, but the principles are the same. We copy what they do and what a whole bunch of other billion-dollar hedge funds do, which I believe private investors are better suited to, because I was told and I've used it, and it's a better way of doing it this way. Okay. Chris, I'll come back to that in a second. All right. So this goes down here and does that. So what did they say? What did Man Group say that they do? Right. And I'll come back to, Chris, you want to know where do you get all this data? I'll come back to it. It's a platform called MT4. It's free from many brokers. So you're not tied to any one broker, and it's completely free, is this. But I'll show you how to download it. All this data is live, real time, all the rest of it. Our own strategies, these red arrows and green arrows, that's from my own strategy, and I'll give you the rules to that strategy in a second. But let me just continue with this for now, okay? And I'll show you how to download platforms like that, which are, like I said, that or other platforms which are free, because we don't want to be paying for our data or our software at all. And I'll give you the strategy, which is also free, because it was given to me by the Lipshut, so there's no big deal about it. So what happens is this. The Man Group said, $19 billion hedge fund said, oh, we've got a minus where the prices are falling, so we put that as a minus. If it goes up like there, we put a plus. Okay, it seems a bit simplistic, and they are just making it over simple, obviously, just to explain a point. But the point is, we're looking at the same similar kind of thing. So they said we do this in every single scenario. We look at each scenario, and if it's always falling, then we go short the market. Okay, really? Yes, that's what trend following, write that down, trend following momentum traders do. This is us, fully short in Facebook. Why are we fully short in Facebook? Because it was minus. That's all. So how did you get your minuses, Alpesh? I'll explain that in a second. Okay, I'll explain that in just 1 second. Or, like I said, what happened with Disney as well? Minus. Let's just zoom in a bit. There you go. So that was fully short. Notice how we couldn't get in right at the top of the market. We didn't see it there. That was a high risk trade at that point. It became a lower risk when this red arrow appeared. How did that red arrow appear again, Alpesh? I'll explain that in the strategy, how we get our strategies. Equally, what they do is if they see a bunch of pluses, they're fully long. If they see a mixture, they go partly long, and then they, guess what? If it then turns into fully long, winners add to winners. They add to their winning position. Write this down. Losers add to losers. You never add to a loss-making position, a losing position. I'll explain how you know where to put a stop loss in a second, okay? That Goldman Sachs report, by the way, the 100 the top stocks they like, you should have all got an email of it, but if you didn't, alpeshpatel.com, and it has the ebooks in there as well, and it's completely free on there, all right? Given that forecasters, according to the FT, are flummoxed by what moves prices, and given that algorithms are dominating all of this, how do we then incorporate the fact that we need to use some of these algos, i.e. to computer power, to tell us how to do this? Don't worry about that part. Don't worry about this. We're going to also cover a little bit of artificial intelligence now. What's artificial intelligence, Alpesh? I keep hearing about it. Well, in the case of trading, it's got nothing to do with chatbots and real-time emotion analysis. These are all subcategories of artificial intelligence. Obviously, for trading, cognitive cybersecurity has got nothing to do with trading or autonomous systems. We're going to look at two things: neural networks and pattern recognition. What, Alpesh? This is getting too esoteric. Guys, I have to cover it a little bit because that's where trading is. If I didn't, you wouldn't know what trading is today. And like I said, 500 to 1,000 per month is what we're after, because we're trying to shoot some of these bills. Sorry, inappropriate image given what's happened. That's me just shooting watermelons. I hate guns, hate them. Sorry for the image. No offense intended. Stupid old image from before. Right. And all traders were looking when to buy, when to sell. All right. Given that that's what we're doing, we, you, me, and the biggest hedge funds were hopefully buying at the same time and selling at the same time. Now, you and I might make just £500 or £5,000 whilst they make $1 billion because they're trading with larger capital. But ideally, we want to level the playing field by buying at the same time, selling at the same time. So how do we level the playing field? So like hedge funds, we make these big Brexit bets. Okay, how do we do that? And I'm going to explain that. And in the Q&A, by the way, I'm going to explain how we sued a broker for £90 million. That's me with Raj Gill, who was one of my apprentices, and he made £20 million from suing a broker. That's me, who's the expert witness in that case, because I had to prove in the High Court that momentum, the strategies I'm talking about, actually work, because the broker ripped him off and didn't execute his trades they should have. So we hate brokers. In the Q&A, we're going to talk about how brokers rip you off and how to avoid that, and how we made 90 million. It's a story. Can I just, right in the last 10 minutes of this webinar also, I'm going to give you the business plan and strategy now, but can I write in the last 10 minutes, in about half an hour's time? You don't have to stay for this part. In the last 10 minutes, tell you some technology my hedge fund has created that we spun out of the hedge fund, which we think is the Google of trading, which we're going to hopefully IPO on NASDAQ or the London Stock Exchange. Can I do that in the last 10 minutes, please? Okay. Hopefully you'll say yes. This is the guy who we're going to use, Bill Lipschutz. He was in the book Mind of a Trader, my book. His chairman was Warren Buffett at the time. What I want to do is show you the business plan now. Thank you all. Show you the business plan and then show you the strategy. And then we do the Q&A where we'll talk about brokers and everything else. All right, so let's do that. Let's do the business plan first. This is really exciting, guys. Let's do the business plan first. All right, and I cannot tell you how exciting it is, because this is the road. We called it the road to rich, and I know it says FX. This applies to stocks and commodities and even cryptocurrencies. I've said on the BBC, and you might have seen me say this on the BBC. It's not that clip. There's another clip where I literally go through our algorithms and explain to an audience. I have an audience of 300 million on that show worldwide, and I explained, here's the algorithms, and this is what it's telling us with cryptocurrencies. And I couldn't believe it. I said our algorithms actually even work on cryptocurrencies, which tells you a lot about cryptocurrencies, that they've come of age. But that's a separate issue. Now, when Bill Lipschutz showed me this business plan 20 odd years ago, so he was the global head of foreign exchange at Salomon Brothers, so the biggest trader in the world, because Salomon Brothers was the biggest bank in the world trading Forex, and he was global head of Forex. His boss was Warren Buffett. He was in the book. The book contents chapters of which, not all of it, the best bits are on that website, alpeshpatel.com. All right. So I don't want you to think, oh, he's pitching the book to us. No, because I'm giving it to you for free. The point is this. He was in this. And the reason I want to teach you what he taught me was that changed my life. It changed my life. And since then, if anybody's followed me for the last 20 years, and put it in the chat box if you have, because many of you say, oh, I remember you from the Bloomberg TV days. Remember you from when you set up the fund, and I saw you last week on BBC. That changed my life. And that makes me really excited about getting this across to you. So let's get on with it. Shut up, Alpesh. Just get on with it. Just tell us. So, oh, by the way, that's my mum. She always makes an honourable visit on all my webinars. I don't know why Prince Charles is bowing down to my trading intellect. He's not. It was a charity function for the British Asian Trust, of which I'm one of the sponsors. If you're looking for a good charity, British Asian Trust, plug. Okay, so Bill Lipschutz said to me, and I want you to grab that pen and paper, please, because it's a business plan time, and then we'll look at the strategy. Because the business plan is to decide whether or not you should be trading anywhere and how much money can you make. He said, treat trading like you're driving a car. Initially, it feels way too difficult. Like Jeremy earlier, was it Jeremy or James, said, look, we're beginners, you're going too fast. You're right. You shouldn't drive a car too quickly. When you're trading, when you first learn to drive, you've got a wing mirror, rear view mirror, you've got steering wheel, you've got a clutch, an accelerator. It just seems too complicated. You just think to yourself, my God, I am never, ever, ever going to learn how to trade. Okay. That being the case, given that that's the case, and you think, I'm just never going to learn how to trade. I'm never going to learn this. But you do learn to drive, don't you? So you'll learn how to trade. So trust me, even though we've got Selma, where do we put the stop loss? Where do we put the entry? Where do we put the take profit? Even though you've got all of that, trust me, like driving, you will do it. Okay. And you will also get the same fulfillment you get from driving, and you'll get the same freedom. All things in life come down to the 3 F's. Funds, i.e. money, fulfillment, and fun. And that's why we drive. That's why we do a lot of things. Fun, fulfillment, and funds. And that's what we're going to be trading. So I'm going to give this, and this is the analogy Bill Lipschutz gave me. So don't be put off just because you think, oh, this looks too complicated for now. And we wrote this down on a piece of paper. So this is Bill 20 years ago when I was a poor student. And that's important that I was a poor student, because there were constraints. There were constraints on me, which are the same constraints you have. I couldn't afford expensive software. I could not afford newsletter subscriptions and any of that nonsense. So he said to me, as you would do as well, if you went to one of the world's richest traders and one of the best in the world, you would have asked him the same thing, which he knew I was asking him, which is, okay, Bill, so how do I make lots of money? All right, and that's what I asked him. And I tell you in the book as well, don't buy the book. It's on the website for free now. It's a 20-year-old book. That's why I give it for free. I get £1 in royalties from a £25 book. Okay, so I don't need the money. You save your money. Just get it from alpeshpatel.com, the chapters that are most relevant. The point is this. So we went through the business plan, and he said, look, you've got to do a business plan first. If you don't do a business plan, you just dive into trading, right? You won't know whether you should be trading at all, how much money you're going to make, and you're going to mess it up. So the business plan was the most exciting thing. And it's the thing he said, which will drive you to continue going forward. Even if you're making some losses now and again, it's the thing which will carry you forward, because it's the one thing which will teach you, okay, regardless of what's happening in the markets. Louise has just asked, will I look at Euro Sterling? That's Euro Sterling, Louise, £1 bars. Louise is a regular on my webinars. Okay, let's have a look. Okay, and this is one which I think I just tweeted before the webinar. We didn't make any money there. I want to show you what a typical, 3 weeks look like. Okay, we got a massive big run. That's why. Do you remember in the charts we get the big winning trades? That's the big winning trade. You get a small win there. That's small. Who cares? This tiny one there, that was small. I'll just get rid of my face for a second. Okay, you got a small win. Well, the small win and then you got a small loss there. That was a loss. Okay. Oh, losing trade. Yeah. And then you get a win, which is a small to medium sized win, though that'll probably get bigger, hopefully, on euros. That's what a typical few trades look like. So Alpesh, what are you looking at? How many positions are you looking at? What time frames? I'm going to come to that in just 1 second after the business plan. I'm going to break all that down for you. So Bill said to me, look, before you can translate those trades into a return and into a livelihood and into paying down your rent, your mortgage, or your children's rent, mortgage, or school fees, or college fees, or education, all the rest of it, Alpesh, what you're going to have to do is get that plan. So let's get on with that. Let me just accelerate because I've been talking too long. He said the first thing you do is you work out what's the maximum loss on any one trade of your total capital. So if your total capital, I said, Bill, I'm a poor student. I don't have much capital. He goes, don't look at the capital you have today. This is really important. Don't look at the capital you have today. Look at the capital, because it's a business plan you intend to have in the future if you're successful. I said, well, millions. He says, no, don't be unreasonable. Look at what you might have realistically 12 months from now. I said, okay. So we use the figure of £20,000. You don't have that today. It's what you might have if you get a track record for 12 months. Okay, you'll get it from friends, family, credit cards, not credit cards, friends and family, for argument's sake. So he said, let's start off with a maximum loss of 1% of your total capital on any one trade. What does that mean? I'll explain in a second. Total capital is £20,000. What it means is that in any one trade, you'll have a maximum loss of £200 because that's 1% of £20,000, or just say dollars. For those of you who are out of the UK, let's take American dollars, $20,000, $200. That's way too much loss, but don't worry. Just hold on for a second. I will explain in a second. I know that's too big, but I will explain that in a second. Now, let's say you have a win-loss ratio of 60-40. What does that mean? You win 60 out of 100 trades, you lose 40 out of 100 trades, okay? And that's fine. That's fine. We can live with that. We can live with that, okay? So assume that's what the ratio is. And this is where it got really exciting. Average loss, like I said, £200. Now remember, winners add to winners. We're going to add to our winning trades. We're going to have a strategy, as all the best momentum funds like at Man AHL, like ours, like a whole bunch of others have, of adding to our winning trade. So let's assume for the moment, just indulge me, that our average winning trade is £300 or $300. Let's say you did 100 trades. So I'm there with Bill and we're working this out. I'm writing it down, and I'm doing this, okay? And I'm writing it down, okay? And let's say you have 100 trades. 60 of those, on our assumptions, were winning at £300. That's profits of £18,000. At this point, I said to Bill, remember I was at university, I said, oh my God, Bill, call my parents. Tell them I want to leave university. And tell them all I want to do is sit in front of a computer screen all day long in my underpants, tapping a keyboard, and magically money will go into my bank account. I know that's what you were all thinking as well, that you kind of come on this webinar and that's what's going to happen. Sorry if the audio at any point just shut off. Let me know if there's any problem with the audio, because I know we've got a slightly dodgy connection at some point. Okay, and Bill said, hang on, Alpesh, hang on. You've got 40 trades which are losing, though. Losses of £8,000. I said, yeah, but Bill, that's still net profits of £10,000 per 100 trades. Again, I know what you're all thinking. You're thinking, hang on, Alpesh, hang on. I said to Bill, I said, tell my parents I want to leave university. You would as well. If you can make £10,000 per 100 trades sitting at home, of course you would. Of course you would. And I said to him, this is when I got carried away, and this is really important part of the story. I said, I'm going to be a day trader, because this was the time back then you'd be a day trader. That means I'll do 100 trades per week, 50 weeks in a year, because the other 2 weeks of the year I'd be driving around on my yacht and my Lamborghini. I don't have a yacht or a Lamborghini, okay? 50 weeks of the year, 100 trades per week. That's 5,000 trades per annum, Bill. All right? That's £500,000 a year I'll make, okay? Based on this £10,000 per 100 trades. Bill, I've made it. I have made my life killing. I'm laughing. I'm just, that's it. Okay, I know what you're all thinking. You're all thinking, don't be stupid, Alpesh. We're not going to do 90% of that. We are not going to do 3/4 of that. We're not going to do 2/3, a half of that, or even a quarter, or a third, or a fifth, or even 15% of that. Let's say for a moment, based on these figures, we did 10% of that. Okay, that's £50,000. If we did 10% of our business plan, we'd do £50,000 in a year. Hang on. I said we're aiming to do 500 to 1,000 per month. So 10% of this business plan is over optimistic. In other words, this business plan is over optimistic. So let's shave it back a bit. Let's get a little bit more realistic. Let's say we keep our day job. Bill said to me, he said, Alpesh, keep your day job. Don't tomorrow morning go and resign from being at university, or in your case, whatever you're doing is your day job. Just keep your day job for a second, everybody, please, if you don't mind. Right? He said, let's say you did 100 trades per 6 months. You know what that is? That's one trade a day. So let's say you're looking at this screen 15 minutes a day for looking for one quality trade, quality over quantity, okay? And that's one trade a day. That means, and you might say, well, I can't do more. I'll tell you why in a second. You shouldn't do more and you'll make ample. All right. So you're doing 100 trades per 6 months or 200 trades per annum. Well, that's £20,000 per annum. It's not 50,000. It's not 10% of the business plan. Now the business plan's at roughly 4%, right? It's £20,000 per annum based on £10,000 per 100 trades. £10,000 profit per 100 trades means per 200 trades, it must be £20,000. Agree? Simple maths. £10,000 per 100 trades means if we're doing one trade a day, which is 200 trades per annum, that's £20,000 per annum, which is about 4% of the business plan. Hang on. No. Because, like I said, our goal is 1,000, 1K per month. If it's 1K per month, okay, then 20,000 per annum is still over optimistic. So it's not 4% of our business plan. We want roughly of our business plan, we want to try and hit about 2% of our business plan in order to get our target of 1,000 a month. And if you can do 1,000, you can do 2. If you can do 2, you can do 4. So that's why we tone down our business plan. But you then should be asking the same thing I asked Bill. Hang on, Bill, £20,000 per annum or even £12,000 per annum. If you're right, Bill, and I only have to be right 6 times out of 10, how come everybody isn't rich? That's what I asked him. It's what you should be asking me. Hang on, Alpesh, if this is correct, how come then everybody isn't rich? How come everybody isn't rich then? And he said there were 3 key reasons. Bad teachers, bad mentors, bad strategies. So let's focus in the final part of the webinar on the strategy, the same strategy, and wrap everything into that, and then talk about brokers and anything else you want to do, Q&A. Let's talk about strategies. What was the strategy which gave us when to sell and told us when to add to our winners, which is this dotted line, okay, so that we're short Facebook, as I said earlier, so that on euro US dollar, where's euro US dollar? That's sterling. Where's it gone? Why can't I see it? My brain is going. I had it a moment ago. Is that euro US dollar? That's euro US dollar. That's why I can't see it. Long on the euro US dollar. Okay. And we've got that. The point is, let me just tile all that up properly. So how come everybody isn't rich? Let's look at the strategy which gives us all of those things, which allows us to see those things. Oh, Louise has asked, can I just go back to the 30-minute? Why am I picking 30-minute and not 1 hour? I like both timeframes. I'll tell you all the timeframes I like, and I also will tell you all the instruments I like statistically based on hardcore evidence. Everything I give you is based on data. We experiment. We do it scientifically. So I'll show you which products I like, what timeframes. In 1 second, I'll name those. Okay. Teacher mentors the same, George. Absolutely the same. Interchangeable. Absolutely correct. Well spotted. I mean, he used those phrases, so I've just used them. I think he was using the of 3. Okay. All right. Eurodollar, 30-minute bars. Let's just go to the 1 hour bar. That's the 1 hour. So you can trade either time frame. In actual fact, if you're really smart, and you've seen this from my emails, you might be long euros on the 30-minute bars, but on the 1 hour, you might take the opportunity to go short wherever that happens, so that you're short on the 1 hour in euros and you're long on the 30-minute. What does that mean? You're hedged. It means you're making profits in both timeframes. You're making money whether the market rises or falls. See, that's the 30-minute euro dollar. That's the 1 hour. 30-minute, 1 hour. In other words, this is 1 hour. Each bar is 1 hour. This is 30-minute. Each bar is 30-minute. The reason I'm showing you both is that's just one strategy. We'll go back to it later. So what are the key reasons for failure? Those are the key reasons. Remember, 100 trades per 6 months, 200 trades per annum, £20,000 per annum. No, that's not what I said. Pay attention. That's my mum again, honorable visit. £1,000 or dollars per month. It's a lot less than this 20,000. It's a lot less. Why? Because in any good business plan, you should always leave a massive margin for error. So if you're targeting even 20,000 per annum, you should then be comfortable if you only make 1,000 a month, which is 12,000 a year, because then you'll go, that's good. That's good. I leave, the reason businesses go bust is they leave no margin of error. They have a business plan, which psychologically through innate biases becomes too optimistic, and then they never hit it, and then they go bust. So it's better to have that massive margin of error. So just to recap, bad teachers, bad mentors, same thing effectively. Okay. A mentor is less hands-on than a teacher. A teacher is there to teach you in a very structured way. A mentor is there just to dip in and out. So Bill Lipschitz was my mentor, not my teacher, if you see what I mean. Okay. That was it. Jeremy, I'll come to that in a second as well on the brokerage part. So what are my timeframes? Write this down, people. 15 minutes a day before and after work, you scan 12 to 24 products, a good diverse range, which aren't highly correlated. It's not just all euros, okay? But you want indices, which ones I like in a second. One screen, right, on your computer or laptop for 15. Don't look at it all day long on your phone, okay? You can place the trade through your broker on your phone. So you can look on your laptop and then place the trade on your phone through the app. Why? Because phone apps are phenomenal. They're very user-friendly. Okay, so you're looking on the screen to that where you've suddenly got two screens without having to pay for it. One trade a day, as I showed you on the business plan, that'll be ample. You can do more later if you want, 20 trades per month. That'll hit your figures. What do I like trading? In particular, this is what I like trading. Major versus minor. I'll show you how to download my strategy as well, but I'll give you the rules for the strategy in a second. And then if you want it automated through an algorithm, I'll show you how to download it, but I'll give you the manual rules in a second, okay? Or minor versus minor currencies. What's a major? It's written there. A minor is all else. Take a photo of this screen. Okay, feel free to take a photo. I don't necessarily always repeat this in my replays because some of it's proprietary and I don't want everybody knowing this. So the people who are on the webinar, it's a closed webinar now because we're full capacity, they'll know. These times, I think the market's trend or the momentum is easier to find. Okay, and the 1 hour time frame and 30-minute are my favorites. So what's the strategy, Alpesh? So let me, in the final part of this webinar, give you the strategy. That Bill Lipschitz gave me was the first one, which I still use in the hedge fund. We have 10 strategies in our hedge fund. This is the first one he taught me, which I still use. And you might say, well, Alpesh, if we're giving it, surely you'll go bust tomorrow morning. No, I won't, because Bill gave it to me. And you look at all these products. You're going to be trading different timeframes on different products. And to be honest, if you've got $1 billion to be able to step in front of my trade so you outmaneuver me, good luck to you. But the chances are you're just going to make the targets come quicker that I want. And so basically you'll let me earn the money quicker. The more of you who follow my strategy, the better. By the way, it's a $3 trillion a day market, the Forex market. So unless there's a trillionaire sitting on this webinar, sorry, it's not going to make a difference you knowing my strategy. It'll just help you. It'll help me, but it won't destroy me. Okay, and not only that, I put it in my Financial Times column, put it in a newspaper, and I'm still around, guys. I'm still standing. All right, so the strategy we're going to use is the same strategy all the biggest hedge funds have been using, called momentum-based strategy. Man AHL uses it, Winton Capital uses it, a whole bunch of others. Aspect Capital uses it. All right, now what is momentum-based trading? It is this. See this guy in a bowler hat? That's Goldman Sachs. That guy is Goldman Sachs, okay, or whoever. They move the market. Two things you need to know. We ride on his coattails. He moves the market. We then ride on his coattails. We do not stand in front of him trying to second guess the market. We do not stand in front of him thinking that we can outsmart him. We do not stand in front of him by trying to gamble and guess which way the markets are going to go and which way he's going to trade. What we do is we let him move the market and we ride his coattails. So we don't make as much as him, but we make enough. We are small players, small fry. Doesn't matter. My hedge fund was started in 2005. We now, after 14 years, only have 100 million euros of assets under management. Okay, one day we hope to have $1 billion. The Dow is now down 900 points. Do I have any issues with that? I do not. I am very happy. You're all making me shed loads of money. There you go. All right. And we double down over here anyway, because my assistant told me we did, where that dotted line is. And I'll come to how we come to all of these in a second. All right. The most important thing is, when do we know when to buy, when to sell? Trend following assets, or these strategies, there's billions of dollars going into them. Since 2005, and I've only got the data from the FT up to 2015, it has been skyrocketing. Now there's probably closer to about $1 trillion in it. Hytham has asked me, do I trade gold? Hytham, I trade anything which moves. I don't care whether it's gold, oil, Forex, DAX. I don't know anything about these products other than if it moves, I'll sell it. I'm like the supermarket grocer. I don't need to be an expert in any of them. By the way, I've got a master's degree from Oxford University in macroeconomics, so I do understand markets. It's just that I don't use that for my trading. I trend follow. Don't be obsessed with one product. When you go buy your Starbucks, they don't care whether you made your money in gold or in Forex or whatever else. As long as it moves, you don't care. And as long as it moves smoothly, you don't care. And the reason you want to look at lots of different, relatively uncorrelated products, and gold is highly correlated to the US dollar, so be careful. The reason you want to look at those is so you get more opportunities. The more opportunities you get, the more likelihood you're going to get a good quality trade. Okay, it's as simple as that. Simple as that. And our euros are going through the roof at the moment still. Against sterling. Okay, the euro against the sterling is going through the roof. And yes, I know the tech stocks are falling. This is going to be actually one of my most lucrative webinars. Normally, you don't come inside a webinar with making shed loads of money because the market's falling. Fantastic. I'll show you how to get all of this in 1 second. All right. All right. So here we go. So Bill Lipschitz said to me, this isn't me. All right. I just want you to know, I didn't come up with this strategy. I wish I had. I'm not Isaac Newton. I'm not Leonardo da Vinci. I'm the guy who copies him. I'm the guy who just copies what successful people are doing, and that makes me enough. That's what you got to try and be. All right. When I was young, I wanted to be Leonardo da Vinci. As I got older, I realized, you know what? I just want to get out of this life alive. I want to make shed loads. So Bill Lipschitz said to me, the way you're going to find whether this momentum is happening is, as a poor student, remember, I couldn't have access to expensive software. He said, what you want to do is a simple strategy, which is going to be good enough for you and good enough to make enough money. All right. He said, what is it? He said, what you should do is you look to see, is the price at any given time closing nearer the high? I said, well, why is that helpful? And he said, that's a bit like those TV auctions. When the price is closing near the high, you know there's likely to be momentum. All right, so I'm going to give you the rules of the strategy now. Just going to explain it, and then I'm going to show you how you can download it, and then we'll do the Q&A and the brokers and everything else, and we'll wrap everything up. Right, so he said, the reason is this. If the price closing near the high, it's like this. I've got 50, anybody give me 60, I've got 60, anybody give me 70, I've got 70, anybody give me 80. That means there's psychological buying pressure, and therefore there's an increased probability that in the next period, the price will move up. An increased probability, not a certainty. So I said, yeah, but Bill, how am I going to measure this? You know, what am I going to sit there with a magnifying glass looking at price charts? And he said, no. And I said, why am I not looking at news? Why am I not trying to outsmart the market? He said, Alpesh, you're never going to outsmart the market because you don't have the time, the energy, the resource, the number of analysts that the bank does. You're far better off trading like this. I went, okay, that's fair enough. And I said, so what am I going to do? So you're going to use the same principles the biggest hedge funds use. The three main principles that all the successful traders in the world use, you're going to use the same principles. The details will differ for you because you're a poor student, but the principles are going to stay the same. And these are the three principles we're going to use. So write this down. This is the most important part of the webinar. One, the first principle we're going to use is we're not just going to measure this using one methodology because no one methodology works. Okay, we're going to use multiple indicators to measure, does the price close near the high? But we're not going to use the indicators the way the textbooks do. All right, because I was a poor student. He said we're going to use the same indicators that are in the textbooks, but not the way in which they do. So I'll explain that in 1 second. All right, that's the first thing. We're going to use multiple indicators to measure, is the price closing near the high? And there's different mathematical ways of doing this. Thankfully, all these indicators are freely available. And I had to use freely available ones because I was a poor student. Secondly, he said, we're going to look to see not just the time frame we like, and my two favorite time frames, which I think are the most lucrative, which I'll prove to you in a second, are the 30-minute and the 1-hour bars. And even if you've got a day job, the 1-hour bar is the best one to trade, and I'll tell you why. Okay, the reason it's the best one to trade, even with a day job, is this. Let's just look at this one. All right, this is the Euro Sterling 30-minute bar. You got a signal on the 2nd, and then you got a signal on the 5th. That's a 30-minute bar, but the signal came, and look at that. Alpesh, you only did 2 trades and one was wrong, so you're 50% wrong. Yes, but look at the profits I made. That one was wrong, the first red bar, but our losses were, as with this strategy and with any good strategy, small in size, short in duration. Wouldn't you love it if I gave you a strategy, which I'm going to do now, whereby your losses are always small in size, short in duration? That's a major issue, because then we never have big losing months. And then you have this where you're rising. Okay, you're rising, and that makes you a hell of a lot more money, which more than pays for the losing trade. That's what real trading is. 50% right, 50% wrong, but the 50% you're right makes a shed load more. So multiple indicators, I'll tell you what they are in a second, not the way the textbooks do, and we're going to look at multiple time frames. So even if we look at the 30-minute, we also look at the time frame next to it. And the reason Bill Lipschitz said to me we do that is because we want to make sure that money is, the momentum from money is in sync in each time frame. So you've got a higher probability of a bigger move. A higher probability, write that down, of a bigger move comes from looking to see, is this happening in not just the 30-minute time frame, but the next time frame, or if you're looking at 1 hour, in the 4-hour time frame. Okay. And he said the final secret of all hedge funds look at multiple indicators. And the reason they look at multiple indicators is they're triple filtering. They're filtering. They're saying not just one indicator suggests that the market is rising, but a second and a third. It's a bit like those alerts you get, warning signs you get somewhere. We've got 3 red alerts. That's a proper high warning. So, or as a lawyer, which I used to be, we have corroborative evidence. We found that you were holding the knife with blood, with your fingerprints on it and blood everywhere and the dead body in front of you. That's pretty corroborative evidence. Okay. And we had 3 people who heard your voice, I'm going to kill you, just before the body, they heard the sound of a body hit the ground. That's corroborative evidence. We want multiple indicators, triple filtration, and we only want to take trades which go through all of those, because that means that we've got the highest quality, best of the best of the best, not every single thing. That's why we only trade 1 trade a day, to keep it high quality. Okay. So secret number 3 is, so that's secret number 1, multiple time frame. Secret number 2, I'm going to go through specifics in a second. Secret number 3 is PR and PC. And I'll explain what PR and PC is. Now, this is incredibly important during the era of Trump and Brexit, because we're seeing so much volatility. I'm showing you a way to trade and keep your calm despite all this volatility. The volatility just gives opportunity in your way, because it makes the markets move faster, sooner. So you make your returns quicker. So, and I'll show you how to download it as well. So don't worry, but I'll show you the rules now, right? Get ready to write down the rules. The first rule is we look at multiple indicators, remember, okay, across multiple time frames, multiple indicators, which all measure is the price closing near the high. So we're going to look at multiple indicators like the MACD, stochastic, RSI. But Alpesh, surely you just said technicals are rubbish and they're not right often enough. They're not. Because none of them are right often enough, we're going to look at multiple indicators. Are they all suggesting a buy? But that isn't enough. There's 3 ways all hedge funds use. They use multiple indicators, not the way the textbooks do, like I said. So the way we're going to use them is not the rules the textbook tell us, but we're going to see, are they flat to rising? And the reason for that is some of them are too lagging and some of them are too premature. The way to get around that is we just look to see, is that indicator like the MACD flat, and they're all freely available, is it flat to just rising? That tells us the price is closing near its highs and therefore a higher probability of move. But that's not enough. That's only one of 3 things. That won't make you enough money. Multiple indicators, flat to rising isn't enough. The next thing we need to do is multiple timeframes. Is it in the next time frame along also flat to rising? Multiple indicators, multiple timeframes, flat to rising. Okay, and then the third thing, I told you PR and PC. What is that? PC is price confirmation. Has the price made a 2-period high? In other words, you've seen something, but has Goldman Sachs bought into the market, whatever rules they were using, or Man AHL, whatever rules all these other hedge funds are using, has it then pushed the price up higher? Price confirmation increases the probability of you being right significantly. That's price confirmation. What's PR? That's pattern recognition. That's where artificial intelligence comes in. We use computing power to develop a whole library of price patterns going back 20 periods before any signal and say, this pattern has preceded this move this often. But no one of those things will ever work in isolation. It has to be price confirmation, pattern recognition, multiple indicators, flat to rising across multiple timeframes. That is what we did. So those are the rules that I've just given you. That is what, when you see this on this webinar, throughout this webinar, whenever you've seen this, that is the first algorithm of my hedge fund, which was multiple indicators, multiple timeframes. Okay, so not just this time frame, 30 minutes, the next time frame along, multiple indicators like the MACD stochastic and the RSI, flat to rising, price confirmation, and pattern recognition, all of that. So we got the computer algorithm to take those rules. You can do it manually, but to take those rules, okay, to take those rules and scan all of this and then tell us, okay, which ones are showing signals. Now, I don't mind if I miss 1,000 trades a day, as long as I get my one quality trade a day, because guess what? Millions of things are trending. So what if I miss the Disney trade? Okay, it's fine, because I can't watch everything constantly all day long. I'll be spread too thin. I'll get the DAX trade instead, which is going short. Fantastic. I'm hedged. I've got the DAX, or I've got lots of uncorrelated. So multiple indicators, multiple time frame price confirmation. Don't worry, I'll show you how to download it. I used this when I was at university. That's me at last exam. As I told you, I met Bill Lipschutz when I was at university to write the book. Red Carnation, last exam. Sorry, I look a dick. I perfected the strategy. I then won awards with this. This is me on the front cover of the business section of the Financial Times. Patel is top FTSE 100 forecaster. I used the same strategy to win a competition over a 12-month period to forecast the market. The Financial Times then said, "You're really good at this. Do you want to write a book about it?" I said, "Hell yeah, because that'll raise my profile, which I can use for capital raising to set up a hedge fund." That's how I did it. I'll show you how to download it in a second. Don't worry, I'll show you how to download it. Jimmy, Henny, Sandeep, I'll show you how to download it. Okay, so we had this top FTSE 100 ranked forecast. So there we go. That's me winning the competition over a 12-month period. I was out in my forecast by only 23 points. The person who came bottom was out by 1,176. Incidentally, you might recognize a name there. Number 14, Neil Woodford. He's in the news for being totally rubbish at the moment. And he is rubbish because he was rubbish back then. This is over 10 years ago. So my track record withstood the test of time. He narrowly beat a cat, which was basically a random number generator. All right, that's me. The Financial Times then said, "Well, will you do a daily diary of your trades?" And I said, "Yeah, I'm good at what I'm doing." So I then used this algorithms to do a daily diary, which helped raise my profile. Merrill Lynch HSBC then licensed the software and paid me $1 million for it over a 12-month period. Well, it was them and a few others who paid it because it was non-exclusive. There we go. That's me on Merrill Lynch HSBC when they had their joint venture. I then used that $1 million to set up a hedge fund because it costs a lot of money to set up a hedge fund. That's me in my very first set of offices with the old Bloomberg screens. Okay, and that's how it came about. So I started off with the same questions you all have. And then I got onto TV as a result of being accurate and good at what I do. BBC, CNBC, Sky News, oh God, I've done it all. Bloomberg TV, my own show. The point is, and this is the one of 10 algorithms. The point is this: multiple indicators. So you filter out the rubbish, not trying to forecast the markets, right? So you might then ask, well, wait a minute, how do we know when to get out? There's two ways you get out of any trade. And let me show you right now. And I'll show you how to download the indicator as well. So we put all those rules into this indicator. Okay, this is our super indicator. So that has got everything from the multiple indicators like the MACD. There you go, the MACD across different time frames and everything else. Okay, there. How do we get out of it? If you're not going to be at your computer screen, this yellow line, that's your trailing stop loss. That becomes a trailing stop loss. Okay, if you're not going to be at your computer screen. If you're going to be at your computer screen, then you get out of it when the initial conditions of multiple indicators, multiple timeframes, et cetera, no longer apply, and you'll get a little X and you'll exit at that point. So, Alpesh, how did you get this stop loss? All hedge funds have, and I'll show you how to download it in a second. I know somebody screaming at me to show you how to download. One second. All hedge funds have two secrets. One is all their stop losses are always what's called volatility-based stop loss. Okay, what does that mean? That means the more volatile the market, the further away this yellow line or stop loss. Why? Well, obviously, if the market's more volatile, they want the stop loss to be further away. So how do you determine where to put a stop loss? Now, I'm going to go to 100 miles an hour for a second, but I'll go over this again, and it's on alpeshpatel.com as well. Okay, what happens is that stop loss could be used by, you measure the range of the market here, and you can do it just by eye, by experience, maybe the last 14 periods, or you'll use a 14-period average true range. Look it up if you don't know what that is. And you say, I'll put this stop loss 2 times that distance or 3 times that distance. Okay? 2 or 3 or 2.75. It's the principle that's important. So you've got a volatility-based stop loss. The more volatile the market, further away the stop loss. But you might say, Alpesh, surely if the stop loss is further away because the market's more volatile, I'm going to have a bigger loss because the stop loss is further away. No, because the second secret of all hedge funds is volatility-based position sizing. That means the further away the stop loss, proportionately smaller the position size. Proportionally smaller the position size. Why? Because then you don't lose more money just because the market's more volatile. And then a mirror reflection of that, and that's ingenious, by the way, volatility-based stop loss, volatility-based position sizing. All the biggest, richest people in the world who trade do that. All the 20% of private investors who make money consistently do that, okay? So what then happens is, see that stop loss, see that distance from that green to yellow line? That mirror reflection is this red dotted line. That's not our profit target. That's where we double down on our position. If our price moves to there, we then use that profit we've made to open another position and we go long, and it has its own stop loss. We just get the computer to do all this for us, obviously. It works out that multiple indicators are flat to rising across multiple timeframes. You can do it manually because I've given you manual rules. If you want the software to do it for you, I'll show you how to do that. We use an algorithm which, just like Google, is an algorithm which searches the internet for information. Well, this is our algorithm which searches the stock market price patterns for returns. Okay, it's as simple as that. That's what it does. It's our Google of trading. We just spun it out of our hedge fund. Okay, we use the computer instead of trying to fight it and step in front of the news. We use the computer to do it for us. So then I ask people, okay, here's the rules. Why don't Okay, Coldip saying the audio is bad. It's your end, not mine. Somebody in your family is downloading on Netflix. Tell them to stop using the Wi-Fi. So what happened is, I said to people, okay, here's the rules. What more do you want to be successful? What more does Coldip and all my other friends, Sonny, James, Hytham, Jeremy, Andre, Anthony, Christine, Mark, everyone, what do you want to be successful? And we polled people and asked them, what do you want? What are your biggest problems that I can solve to make sure you get rich? My job is to make you rich. How do I make you rich? Okay, simple as that. I mean, why are you on this webinar? By the way, I didn't say that. You know who first said that? Bill Lipschutz said that to me. David Kite, all the people who were in my book said it. They said, well, our job's to try and make you rich, Alpesh. That's why we're in the book. So I didn't say it. They said it. You know what it was? People said, well, we want more than just the rules, Alpesh. We need, just show us this again at our own pace so we can look at this ourselves. So I said, okay, I can do that. Give us one-to-one attention. Let us have you one-to-one, not in a webinar. I asked them to give me their wish list. They said, make sure you're not going to charge us anything every day, every week, every month, because you said subscriptions are bad. I said, oh, shit, I did. You're right. We want it in the convenience of our own home. We want to be able to do this when we come home from work at 3 in the morning, or if we're in California, not reliant on being in a hotel room with you, Alpesh, to do it. We want it to be compatible with our day job, which is what this is anyway, because you've got, the markets are open 24 hours a day, 6 days a week. I bet you didn't know that. No hotel costs, no travel costs, because I ask people, what's your dream wish list? We want live trading practice, and we want to show you, send you our trades. And I said, well, I'm busy. How do I do that? So we have to find a way of trying to do that. We want ongoing support for life. If you're any good, Alpesh, you should give a lifetime support. We want something which uses modern technology, uses Google and everything else, so that we can get the benefits of modern technology, artificial intelligence, et cetera, et cetera. And I've just asked you all on a poll, and I'm going to end that poll. What are the biggest problems you want solved? Some of you said knowing when to enter a trade. Well, this solves that. That's the biggest problem. You're absolutely right. I said when to take profits. Either you're going to have a trailing stop loss or the momentum runs out, and the system tells you that. Or the rules say that. Handling emotions. Guess what? When you're putting the computer system in play, you're still placing the trades. You follow the signal and you place whichever trades you want, but the emotions are removed because it is saying buy now, sell now, buy now, sell now. Having a trading business plan, I give you that. I've already given you one, but I'll give you a bespoke one. The reason having a trading business plan is so important is so you don't go off track just because you had a losing streak or you lost 1 or 2 trades. Okay. What else did you say? Say how not to be a screen slave. Well, I told you we're gonna monitor the screen for 15 minutes a day, and then when we monitored it for 15 minutes a day, you scan this for 15 minutes a day. You open each one of these windows and you say, right, okay, from opening these windows, which ones is there a signal near the price? The price is near a signal. Oh, its price is near a signal in this. So I will place that trade. I know where the stop loss is because look at this. And your system must always have this. Look at this. It tells me where to sell. There, that's the sell. That's the red line shown by the arrow. It tells me where the stop loss is because it's worked it out. It also even tells me 7 pence a point, and some brokers will allow you to do that. Okay. No, I'll send you these. I'll show you how to do this if you wish. You can download it. I've given you the manual rules, Sonny, but I'll show you how to download it in 1 second, Sonny. I'll show you how to download it. The reason we then created this as an indicator to download is this. Without an indicator, this is the problem. What we found was people were using the rules manually, which is fine. You can do that after this webinar if you wish. Okay, Sonny and everyone else. But this is what it was like. When you have an indicator, you're able, through the computer system, right, through MT4 and the computer system and everything that I've shown you, to do it like this. You've got a lot more coming in. We also found once we gave people an indicator, they had confidence in the strategy went up. Give me 5 more minutes and I'll show you how to download it. I'll give you the download link. Lower stress over losses, Okay, a business plan for long-term profits, clarity of exits, clarity of entries, clarity of stop loss, because it shows you all of that. Look, it's given you the, because that's what you want any strategies to do. It's given you the stop loss right here. Okay, it's told you where to add to your winners, and it writes it all down here for you just in case you miss any of it in any event. And then you can pick which ones you want to monitor anyway in your own time frame. So it's your own sort of mini hedge fund. This is the algorithm from ours, but it's your own little mini hedge fund. So I said to my team, I want you to put all this into it, multiple indicators, multiple time frames, okay, price confirmation, and pattern recognition. Obviously, you're not going to do the artificial intelligence manually yourself at home. You don't need to. You'll still get good enough results. But price confirmation, multiple indicators, multiple timeframes, and we called it the pipspredator. We put this together into an algorithm. Like Google's an algorithm which searches the internet, this is our algorithm which searches these prices. And the algorithm shows a green arrow, as you've seen, buy when the price goes above the horizontal line, because that confirms this price momentum, because multiple indicators, multiple timeframes are flat to rising. And the arrow can alert you on your cell phone if you want, but honestly, just spend 15 minutes in front of the screens. Can this stop losses and entry prices be added to my algorithm? Yes, they're all there. They're all in the algorithm, James. So then what happens? Well, this is what happened. This is where it got really exciting. We found the 1 hour time frame was the most lucrative. Why? We gave the algorithm to people to trade, including my own internal team, because we used this to train up. Initially, this idea came out because we were using it to train new staff into my hedge fund. Okay. And they did roughly 25 trades per month. Some months they'd do as many as 40, like now, thanks to the stock market falls and Brexit, you might do 40 in a month. Other months, which are really quiet, like Christmas, you might do 16 in a month, okay? The net pips captured, winning minus losing, was 2,250 net pips. Hold on for a second. 70 out of 30 were winning trades. 70 out of 100 were winning trades, was the best winning streak. The worst winning streak was 30 out of 100. That doesn't matter, and I'll explain why. The typical stop loss was 50 points before we got stopped out. Imagine you did £2 or $2 a trade, which is way too big, but just bear with me a minute. You'd have lost 100, 2 times 50, $100 or £100 on a trade, way too much. But bear with me 1 second. 2 times 2,250 net pips captured in a month, i.e. winning minus losing across those 25 odd trades, is £4,500 in a month. Right? Wait a minute. I said 500 a month is what we're targeting. So this was 10 times more than what we're targeting. Therefore, we didn't need to do £2 a point. We could do 20 pence a point, which some brokers will let you. And I'll come to brokers in a second. If you can do 20 pence a point, guess what? If you can do 20 pence a point, this is a mass market, a Google, because that means everybody can do it. You could risk, therefore, £10 a trade and still be trading and hit your 500 a month. That's how we knew we had the Google of trading. We had something which is going to blow people's minds. We had something we should offer everybody. So what we then did is we realized, you know what? I'm a hedge fund manager, professionally trained communicator, Bloomberg TV. I'm also a barrister, so I don't bore people. Okay. Bloomberg pay me and Financial Times pay me. Financial Times for my articles, Bloomberg for my TV shows. I'm a visiting fellow at Oxford University. We continue the research into our algorithms. This is version 4 of the algorithm, okay? Award winner, as you saw in the Financial Times. We realized nobody else has got this. So we spun this technology out of the hedge fund because we realized, and we stole this idea from a billionaire. We stole 3 ideas from 3 billionaires. Jeff Bezos, who was a hedge fund manager and then set up Amazon, the technology company, said, well, why don't we as hedge funds set up a technology company and created this algorithm? And then we stole an idea from Donald Trump, the billionaire, and Lord Alan Sugar, the billionaire, who both have a program in the UK called The Apprentice, or in the US called The Apprentice. We thought, why don't we give this to a small group of apprentices to trial? Okay, and the questions people have is, can it make money? Is it easy? Can I do it anytime with a day job? Yes. It is. Can it make money? I'll show you some more winning trades. Is it easy? Yes, because we use it in our own hedge fund, because our guys don't sit in front of a computer screen all day long. We can get trainees to do that. Our guys' job is to go out and meet pension funds and sovereign wealth funds to raise more money for the fund. Obviously, we're a business. How much does it make? I'll show that in a second. Does it make life easier? Hell yes. Automation. Of course it does. Are there checklists? I'll give you the same checklist we give trainees in our hedge fund as well. Okay. Here's one trade from, and a full disclosure, not one of my trades, one of my apprentices. Euro, US dollar, 5-minute bars. I don't like doing 5-minute bars, but my apprentices don't sometimes listen. There we go. Euro, US dollar. This is Kevin, I think, from Leeds. I'm also from Leeds. That's why I remember it. Euro, US dollar, 5-minute bars. 3 hours, 75 pips, including additional positions, 75 times $30 a pip, $2,250. Why $30 a pip? Once you're confident and you're progressing and you've been doing it for a while, you gradually increase. Initially, you start off small. That's just one. Here's another. Same thing. Notice this. Additional positions. This wasn't me. One of my apprentices, Euro, US dollar, 15-minute bars, 9 hours, 73 times $30, but 2,190. You build up. I'm not going to go through all of them. This is who's behind the strategy and who endorses it. One of many people. Pat Arbor, chairman of the Chicago Board of Trade. As he wrote in print on my Financial Times book, so you ask, oh, who's behind this, Alpesh? Who endorses it? Who'll speak for you? Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies while capturing the ineffable ethos of successful traders. You want to download this? Tell me if you want to download it, okay? And I'll give you the link now. We want people to go from this to this. This to this. That's what it is. Without an indicator, this is what people are. With an indicator, this is what they are. This is one of my most successful apprentices. Biku Alawalia left school at 16. This is easily my most successful. Naomi Wastel, she left university, joined me for 3 years, and then is now working at Newton with $10 billion. All right. So that's it. I take on apprentices in groups of 25 to use our technology. We've had 700 go through the program in groups of 25. Why 25? Because I'm the mentor. Okay, I mentor you for life because I want you to get to profitability. Why are you so interested in us getting to profitability? I'll tell you why. We want this company to IPO on the New York Stock Exchange, NASDAQ, or the London Stock Exchange for hopefully an IPO of $1 billion. Okay, everybody wants to be rich. Before we can do that, we're going to get 1,000 people to go through the program, and we're going to get venture capitalists once we get to 1,000 people to invest into the company. Okay, so I need to get 1,000 people to profitability. I've got about 700 so far. I've gone through the program and got through that. And I was thinking, how do I do this risk-free for people? Okay, so I'm going to let people use this for 30 days, risk-free, but only in groups of 25. All right, only in groups of 25. And it's going to be first come, first serve. It's a 30-day no quibble money back guarantee. So it's risk-free for you. But for trying it, I'm going to give you signed copies to keep. Signed copies of my 2 most recent books to keep. So that's £50 worth of books because I want to get to that 1,000 people. I keep people in groups 25 at all, okay? As well, right? And it's going to be in groups, like I said, of 25 for that reason. And it's not for 7 days, not for 14. It's for 25 days, but it is first come, first serve. And people ask, why do you only limit it to 25? The reason I limit it to 25, I do the mentoring, and mentoring's for life. I also give you 2 courses, which are included in this, which you've got for life. I also give you 6 webinars every Saturday live with me. So you've got interaction with me. I show you my live trades on Mondays, Wednesdays, and Fridays in a newsletter. I also give you a newsletter every day of what I'm reading. And you've got the software, which shows you live what we're looking at. I also look through over your shoulder because you send me your trades if you want through the mentoring so I can tell you where you're going right, where you're going wrong. That mentoring is for life. There is nothing to pay every day, every week, every month. Okay, because initially for the first 1,000, I'm doing it as no subscription charges. All right. Okay, this is the link you go to. Jay, before you go, that's the link you go to if you want it. It is a no quibble money back guarantee, so it's risk free for you guys. Okay, it is risk free for you guys on that basis. The reason we did this price, it's because we didn't want to do any more because we thought if we do more than that, it's going to knock out a lot of people. If we did any less, people aren't going to respect it. And if they don't respect it, they're not going to let me get them to profitability. If they don't get to profitability, when we go to the venture capitalists, which are Amazon Ventures, SoftBank, and Google Ventures, they're going to say, oh, you haven't got 1,000 people to profitability. So we want people who are committed, who are excited, and only people who are committed and excited, okay? Only those. And I'm going to show you what happens. I'm going to show you the webinar site, and I'm a public figure. We're going to use this. What I want is everybody who signs up, I also want to give them free shares in the company, which we're going to IPO. That's subject to lawyers. I'm going to use my profile on TV to promote the company, raise it into a $1 billion IPO, hopefully next year for the IPO. Initially, the price is just 1,000, one-off payment. Jonathan, it's a one-off payment. There is no ongoing cost. We're on version 4. All upgrades are free for life. All the data is free for life. All the software is free for life. There is no ongoing cost. You get to keep the books even if you get a refund within 30 days. Okay, you get to keep the books for life. The 30-day course and the 12-week course, how do they differ? One is for total beginners. The other one is for people who want to become hedge fund managers. When you go to alpeshpatel.com/here, if you want to buy the technology, so it incorporates all the best bits of the trading that I've shown you from Mind of a Trader and all the leading traders in the world. Okay. Louise, it's gone through. There's 2 Louises. Your Louise B, it's gone through. Kuljit, it's gone through. Yours has gone through. Ajit has gone through as well, and so has Mohammed and Brian. It's gone through, and so has Benny. I'm excited as well, Benny. What happens is, yes, it works on gold, oil, stocks, FTSE, because we use it for that. When I'm on the BBC, this is what I'm using. You'll have seen me talk about it on CNBC. You'll see me talk about it on all the channels as well. There's no ongoing cost. It's free upgrades. Why? Because for the first 1,000, I don't want anybody to have ongoing costs, nothing else. In future, for other people, not for you, it'll be £2,000 a year for the mentoring, £2,000 a year for the algorithm. Why? Because that's what that's what they want. They're all on the software, Shim. All the charts, everything's on there. Okay. As well, it's all on there. James, just email me if there's any issues. Lifetime mentoring from me personally, only for the first 1,000 people going through it, because obviously I can't. When it becomes a global company, there'll be other mentors, but you will always have me for life. You can always meet me. Wednesday, I'm meeting about 3 apprentices on there. There's an online training course. There's also, I'm going to show you the mentoring site as well, and you've got access to me. You've got a Skype number to me, a 24/7 number as well. Okay, that's why you can see why I limit it to 25 each time, because I'm giving that. You can use PayPal. You'll see the padlock, which means your data secure. We don't store any of your data. You can use PayPal if you want to be ultra secure. If you're using American Express, you go through PayPal. You don't need a PayPal account to use PayPal. I know it sounds weird, but you don't need to. There's VAT payable if you're in the EU. If you're not in the EU, like you're in Thailand, there's no VAT payable, or the US. Okay, you fill in your details, you get immediate downloadable access. You download the software and you start trading tonight, and maybe you make your 1,000 back immediately because you start trading the Dow, or you'll be speaking to me tonight anyway. All right, and all these charts, they're all on there, all this software. There's no ongoing cost. Shim, there's no ongoing costs at all for anything. It is just lifetime mentoring. This is version 4 of pipspredator. So the indicator is called pipspredator. The mentoring is for life from me, and it happens through the courses, but it gets better. There's a community site of traders. You're going to be on the community site. You can search that for any information you want on that community site. It's all part of this. You will also get my daily trades, so as well as the software where you can look at it. You will also learn from me and what we're teaching and what we're finding. Every Monday, Wednesday, and Friday, you'll get all of this. You get to see that. Some people say that newsletter alone is worth it. Let's just type that. Let's tweet the hell out of it as well and just say, this is phenomenal. Thank you, Alpesh. Okay. Do that in a second. It's not working. There you go. All right. So we have the latest views on there. Plus, it's a community site, so you can ask any questions, what and when to trade, how to increase your returns, everything else, learning trade selection. That's on that community site, which I'm on as well. I also do a podcast regularly, which you get as an apprentice. I'll tell you what else you get as an apprentice. You get this dedicated website as an apprentice. Now, I love this site, and I'll tell you why I absolutely love this site. It's not just because you've got a whole load of people who've licensed this, and you've not only just because you've got an IT team who will install it for you. If it takes more than 10 minutes, we'll install it for you. Bernadette, congratulations. Barbara, congratulations to you. It's gone through. As you go through, as you sign up, let me know. This is my baby. Just like the iPhone was Steve Jobs' baby, this is my baby. And because this is my baby, I'm the one promoting it. I want this to become $1 billion business. I think it will be. I was at the London Stock Exchange just this past week. Got a whole load of people who love it. Oh, I've also put in on here comments from people who asked for refunds, like this guy who did. He said, after 1 month I'm up just 5%, which seems very few. And he asked for his money back. Fine. There's no pleasing some people. He was only up 5% in a month, so he wasn't happy, which is annualized 60% in a year. He asked for his cap. I put everybody's comments up, good, bad, or whatever. Come visit me in my offices, 84 Brick Street. On Saturdays, I give webinars at 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on adding to winners, 3 o'clock on money management, 4 o'clock on adding to winners. So one webinar every hour. And you've also got Skype access if you're in Hong Kong. There's a dedicated number. US, there's a dedicated number. Most people come from Canada, UK, US, Singapore, South Africa, Australia, New Zealand, Hong Kong. Let me know if you're from a different part of the world as you sign up. Thank you very much. Shamali, yours has gone through. Kiran, so has yours. Raymond, as yours has gone through. Shant, yours has gone through as well. Congratulations. I am very excited to be starting this journey with you, and I'm glad you're excited to be starting this journey. The mentoring, you've got the emails, you've got the videos, you've got the website. 12-week course, you got access to me. I look over your shoulder, you look over mine. articles, and the books you keep as well. But I tell you what, it gets better than that. The 12-week course, I tell you what we found, that if you want to accelerate your route to profitability and making money, the quickest way to accelerate it, we found, and this is the 12-week course, we do it in bite size, each little tiny bit, so you're always feeling you're getting progress. Okay, what we found helped people the most for accelerating it was this. When they fill in a mentoring questionnaire, which we give them, and then I then look at it and I give them a bespoke trading plan. So I tell them what's going to make them capital or not. This works out their strengths and their weaknesses. This is like the Harrods of trading. So I give them, you can see why it's limited to 25 people at a time, okay? What this did is, what this this questionnaire does is it allows me to see what your strengths and weaknesses are. So for every single apprentice, I know exactly what to focus with them on, whether they're beginners, advanced, whether they want to focus on one area or another. That accelerated their learning. I tell you what else accelerated their learning. Cheat sheets. As part of this 12-week course, we give them cheat sheets. This cheat sheet means everything from how to place a trade, if they're total beginners. This meant that they could then, at 3 in the morning, they didn't have to wait for me. They could see at any given point, they could search the site. Oh, how do I place a trade, Alpesh? And it broke it down. And because it had images and pictures, which some people like, that was great. And then what we did, even better than that, because some people like videos, is we then, as well as the Saturday webinars, we gave them a trade sheet, and everything had videos put to it as well. The trade sheet allows them to enter their trades with me and keep a journal, and then I can look over their shoulders, because I really want you to get to profitability. If you get to profitability, I get closer to the $1 billion valuation. Jacqueline, minimum amount to fund any trading account with any broker, I recommend. And remember, your broker, you can pick any broker you want to place a trade with. I'd say, and I tell people, start off with a demo account. Then start, so no money initially until you're consistently profitable. In 30 days, you'll know whether you're not, you're consistently profitable. Therefore, you'll know whether to ask for your money back, which I tell you won't, because you're going to be so impressed. 90% of the people say, hey, I love this, and they never ask for their money back. 10% say, look, you know what, Alpesh, trading's not for me, I'm too busy, or I'm really sickly ill, or whatever. I mean, they feel they have to make excuses, I think, because there's no way that many people get cancer. And they say, oh, I'm really sick. I say, listen, it's a no-call money-back guarantee. Don't worry about it. You're going to download the indicator tonight. You will instantly see the signals. Susan, you will instantly see the signals. We will install it for you if it takes more than 10 minutes to install. Upgrades are free for life as well, so don't worry about that. We'll walk you through it, so don't worry. You've got all the course material. But with the 12-week course, you can take as long as you want to do it. You can take the rest of your life if you want to do it. I'm always there. That's why everybody moves on their own independent time frame. But what we say to people, Jacqueline, is $1,000 to fund an account with whichever broker you want. Not with our broker. I don't have a broker. With whichever broker you want. The reason for that is it's a good amount to start to learn to trade. It's not too large to lose. You start with that, okay? And that's really important, okay? Anthony, just email me. That's perfectly fine, Anthony. That's good news. Download, install the indicator. And Anthony, you'll have seen since 2016, we've upgraded the indicator. One of the key ways in which we upgrade the indicator is the library. We've increased the use of artificial intelligence for the pattern recognition. So the library of patterns, because computing power has increased. The computing power that we use for that is we use Microsoft Azure in the cloud, because we can't have that kind of super computer power. That's a major innovation since 2016. We couldn't have done that before. When that came along, that helped us improve our accuracy, improve our entries, and so on. Okay, so you've got all of this. You've got all of these little bite-sized bits in the 12-week course. Fantastic. Glad you've done it, Anthony. You should also, Anthony, have the latest manual. And it's the same manual we use with our staff. As you sign up, people, please message me so I can give you a shout out. Barry, yours has gone through. Let me see who else is through. Jimmy, yours has gone through. Anthony, no, that's a different Anthony. Sorry, ignore that, Anthony. Sharon, yours has gone through. Sandeep, yours has gone through as well. I can see that. No, don't worry, it's gone through. Don't try again, it's gone through. Okay. Yes, you get a trader, you get both cases. I hope to be high frequency manager, hedge fund manager eventually. That's right. Oh, we get a lot of people who want to be hedge fund managers. What they do, and I tell them to do this, is sometimes they get it for their kids because they want their kids to have a job. Listen, you can have this for your kids. You don't have to have multiple licenses to install it on different computers, Brian. It's not an issue. I'm not here to try and sort of rip you off and say, oh, no, you've got to do this. When you go to the to this and you work through the modules on all of this, you're going to get ebooks and everything. You got access to me, anything you don't understand. Let me tell you what else you get. This is the not that one. Let me show you. Where's it gone? Where's it gone? Here it is. This is one of the courses, the 30-day course, okay, which is focused on FX, but it applies to everything else. The way we've done it is very bite-sized, test your knowledge, smart trader hot tips, module reviews. So it's very structured. You could do one module a week if you wanted. Okay, module 2, the currency quote, mastering all the jargon, place your trade, charts, longs and shorts, all the rest of it. This means that you can go from beginner to basically the shortcut to get into that. Does it allow for mobile connection of trades? Yes. Audio cut? No. I think everything else is fine. Any other questions, let me know. If anybody's on the edge of getting it, let me know. I'll drop you an email. The same as the down. Yes, it is, Anthony. The answer to your questions, yes. Okay, so we did this. Who else have we got? There we go. If you can't get through, it means that all the licenses have gone, I'm afraid. Sorry. I don't know when I'm going to do the next one. And yes, it's going to be £2,000 a year for the indicator, £2,000 a year for the mentoring in future. Not for you guys. It won't affect you guys who sign up today. That's the FTSE. Oh, God. Bobby, that's the FTSE. There you go. You want to look at this. Oh, you've already... Oh, right. Bobby, you're bloody quick. Bobby's downloaded, installed it. Oh, no, you're an existing apprentice. Sorry. And you're doing this. My pleasure. Thank you very much. I am delighted. Bobby is very happy and excited. He's been following this and shorting the FTSE. Well, you could argue, well, Alpesh, I didn't need your indicator to short the FTSE. You could argue that if you wanted, but to be honest, it doesn't half make life easier, doesn't it? Okay. Good. Trading strategies, best indicators, news-based strategy. Go into all of this as well. I want you guys to be fully educated. There we go. www. Sticky message. Come on, Alpesh. 1 second, Sunny. I'll just post it to everybody right now. Okay, so you can see that. And for those who want to email me because they're a bit on the edge or they got any questions, that's the email address. Apprentices, you're going to get my private email address because we're going to be talking a lot because we're in the business of making you money. Okay, it's as simple as that. These are the main countries I've got people from. And this is why we think we've got the Google of trading. This is why we think we've got $1 billion business and why I want to give free shares to everybody who signs up. Does it work as properly on the Dow as Forex? Yes, indeed. There's no reason why you should think it's purely Forex. If you're looking at indices, Phil, try the DAX. Really love it on the DAX. The DAX is my favorite. Where's it gone? Here we go. We were showing it earlier. That's why I was showing it. That's the DAX. This is the Dow. There's the Dow. Would you say it works as profitably? The problem with answering that question is this. What if I went through a winning streak on the Dow over a last 10 trades and I went through a losing streak on the DAX? Then I can't really say, is it more profitable? What we know is that the psychology behind it is just as accurate from what we've experienced. Because the psychology is the price closing near a high or near a low? Multiple indicators to filter out all the bad indicators. Only if all the indicators are aligned across all the different time frames, and we've got pattern recognition. And remember, we're using rules such as never add to a losing trade, volatility-based stop loss, volatility-based position sizing, double down on your winners. All of those things is what makes it more profitable, Phil. Okay, all of those tactics. I explain all of that in the manual anyway. Okay. 30-day money-back guarantee. It's very simple. If you want to activate the money back, just email me. Okay, it's there, alpesh.patel, or email the company or whatever. There's no complicated way of asking it back, and it's really there. It's really easy, okay? And it's in the manual, and when you download it, there's a million ways you can ask for the refund in case you want to do that. You can keep the books if you wish, and the USB and all the other goodies we give you when you order it. I know some people like to do that in the end. They fall in love with it, and they say, hey, that's great. That's not a problem, okay? Learn when to buy and sell and how much risk. Forex, commodities, even cryptos. Now, I don't have an issue with shorting cryptos. I don't have a problem with that because it's money. People go, oh, doesn't that mean you like Bitcoin? No, it doesn't mean anything of the sort. Okay, whether I like Bitcoin or not. It's just another product to trade. I'll trade anything. That's what a proper trader does. He'll trade anything, okay? And that's the point of it. And next time you see me on BBC or CNBC, you got to know, and you'll have heard me because you can hear it, when you watch this kind of stuff, that I talk about the indicators. That's me talking on the BBC about pipspredator algorithms and what we do. Okay, it's as simple as that. It's as simple as that. I will talk about it all the time. That's how much I love it. Wouldn't you? If you had an iPhone, didn't Steve Jobs talk about it all the bloody time? Didn't he love it that much? I do. I think it's $1 billion company. I want to make as many people as possible profitable using it. In the same way, guess what? This is $1 billion business, $1 trillion business of the iPhone, and they want to make everybody get use out of it as well. If you can't add value to people, then you shouldn't be doing the business. Okay, that's what it's based on. Is the book. Going to try and see right the bonuses. 12-week course. We think the bonuses are alone worth €5,000, $5,000. 30-day online course as well. The international best-selling books, two of my most recent books will get mailed to you. USB. You got access to my traders community, my VIP traders community. Weekly live webinar on Saturdays, trades on Mondays, Wednesdays, and Fridays. My podcast as well. Daily newsletter that tells you all the news that I'm reading every day as well. Join me. Oh, thank you, Phil. I really appreciate it. Thank you very much, my friend. Here are some of the comments we've had from different Coots said this: an essential companion for the online trader. John Watson, co-chairman, CNBC Arabia. The lid of the trader's black box has finally been well and truly removed. There you go. All right, who we've worked with, these are paying clients: Bloomberg, Merrill Lynch, Charles Schwab, Euronext. Okay. Yes, I'm excited about it. I'm sorry I sound a bit excitable about it all. I very much am. I think we've got 5 licenses left. Well, you better hurry up, Jonathan. We've got 5. No, we've got 4, 3, 2, 1. No, we've got 2 left. From what I can tell, we've got 2 left, but that might not be accurate. If your payment doesn't go through, it means sorry, they've all gone. Sorry about that. Apologies. Do you have to pay for updates? No. How long is the contract? There's no contract. You're not locked in. There's only a one-off payment. Okay. If I need to, and the data is for life, mentoring's for life. If I need to install, can somebody do it for me? Yes. Where do you get the time to mentor? Guess what? All the trading courses and the material and the manuals and everything I give you is so good. I don't need time, a lot of time to mentor, because you don't have that many questions. If I get more than 3 questions from apprentices in a day, my secretary stops me from taking on new apprentices. So there's no worries about my time. And I got my phone with me, so I can always email back. And I love this stuff. All right. Is there a manual? Yes, there is. Can you use it on a Mac? Yes, I do. How much does it make? Well, you saw some trades there. It depends on how much capital you start off with and how many trades you place. It's as simple as that. If you don't place any trades, then it won't. Thank you, Sunny. I love it. What a great comment. Thank you very much, Mr. Sunny Patel, fellow Gujarati. Thank you very much. How do I know what to trade? Oh, I show you the time frames again. I'll run through it 30 minute and 1 hour, and the range of products as well. I'm just a beginner. Is it for me? Yeah, it was actually built for beginners. I'll tell you why. In my firm, it was far cheaper to hire people straight out of university to join my firm and become trainee hedge fund managers than it was getting people from a more experienced firm and train them up. So we had to hire beginners because it's cheaper. And remember, I'm the one paying everyone's salaries. So that's why. Can we get a VAT receipt? Yes, you can. Work full time. Is it something I can do? Yes, because the markets are open 24 hours a day, 6 days a week. So you can trade at 3 in the morning if you want. You're only looking at the markets 15 minutes a day before and after work. Longer if you want, but you'll get a risk. But you want to not be a screen slave, remember. Does it have alerts? Yes, you can get alerts, but don't use alerts, because you'll get swamped and you'll start doing low quality trades out of boredom because you're getting ping, ping, ping alerts. It's a bit like likes on Facebook. You get distracted. Don't be distracted. Focus on quality, 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 quality. Okay. So like I said, that's that. Listen, guys, if that's enough, I've got a bunch of apprentices that I want to make rich. Okay. It's as simple as that. I got a bunch of apprentices who are seeing the Dow fall and are saying, hey, Mr. Patel, please show us how to make money on the Dow or whatever else. And that's what I want to do now. Okay. So I'm going to say bye. Any of you who are on the edge, just email me and message me. But I'm going to get going because I've got apprentices to make money for. I know it sounds crass and crude. You know what? It's what David Kite said. We're here to make money. If you're not here to make money, I hope you like looking at my face for 90 minutes. If you're here to make money, you should be in. If you're not, hey, that's fine. Some people aren't. They're too scared. They don't want a risk-free trade, and that's perfectly fine. You know, you should not, at least you know trading's not for you if this isn't for you. What else? I might be in California. Sunny, tell me whereabouts you are, because I'm often in California. I'm in Los Angeles, San Francisco a lot, Silicon Valley, because of the IPO for this. So happy to oblige. and meet apprentices at any time. So do let me know. Any other questions any of you have, let me know. Okay, let me know any other questions you have. Okay, and so I am hoping, apprentices, I'll see you on the other side, and we will focus on things like this. And we're going to download the indicator, and we're going to start making some money tonight. We're going to start talking one-to-one. Kaldeep, just send me the details. Just email me. Thank you, Sunny. Email me now. Anybody else who's on the edge, email me. Please advise the full Goldman Sachs. Yes, Sven, the full Goldman Sachs report I've just uploaded to alpeshpatel.com. Alpeshpatel.com. Oh, you're in Boca Raton in Florida. I'm sometimes in Miami and Fort Lauderdale as well. I'll let you know. Boca Raton, you lucky person. Do you want to swap? And also New York City. Fantastic. Let's keep in touch. By the way, I'm also on LinkedIn. This is only for apprentices, please. But apprentices, connect with me on LinkedIn. It's completely free. You'll also see through my LinkedIn who I'm connected to. LinkedIn's brilliant because you can tell if somebody's the real deal, because only people with the real deal will have the kind of connections that you would expect. So I've got CEOs of banks. I've got the government who endorse me and so on. LinkedIn is like blockchain. It allows you to see that, hey, this guy must be the real deal because look at who's endorsed him and look who's behind him. And then you can vet that those people really have endorsed him. Oh, look, that's the CEO of Barclays Bank who said Alpesh Patel is one of the world's greatest traders. Whoa, wow. Okay. Oh, so it's not just pictures of me with Governor of the Bank of England or Bill Clinton or Prince Charles. Where's Bill Clinton? He was on here. Somewhere out there is. Okay, all the royals. Who cares? What you care about is, well, who vouches for your reputation, Alpesh? Other than all your peers and your books and the media and the government and all the rest of it. So LinkedIn's really great for that, because otherwise I'm just a bloke on the internet, all right? Kuldeep, thank you very much, my friend. Like I said, apprentices, I will see you on the other side. Guys, also message me if there's anything you want me to do in a future webinar. When would you like me to do another webinar? Am I doing them too frequently? Am I doing them too infrequently? Anything that I've missed? Anything that you'd like to know? Where did you hear about me? As much feedback as possible in the chat box you could give me. I would really appreciate it. I think we've got $1 billion company. Please keep an eye out for it everywhere you go. Okay. Everybody else, apprentices, I will see you on the other side shortly. Let's make some money. Like I said, you've got a whole bunch of, I forgot to show you these slides. I also created the UK chapter of TIE, which is a mentoring organization for entrepreneurs. This was our first chairman. So it mentors entrepreneurs. So I was the co-founder in the UK. It started in Silicon Valley with the founders of Hotmail, Subir Bhatia, and the founder of Sun Microsystems. It's the world's largest entrepreneur mentoring organization. So I know about mentoring people. Okay, I'm going to be mentoring you guys. I'm going to knock you into shape. Thank you, Sunny. Have a great day. If you there's 24/7 live person as well. Join my networks through LinkedIn as an apprentice. Also, the trading courses, like I said, which took 20 years to develop. Daily market news. Just recap that. The trading books you keep. The videos you're going to see from the 30-day course and the 12-week course. Meet me. I'm in all these cities regularly. I travel the world constantly. I'm going to be in South Korea soon, and Beijing, Hong Kong, and Ulaanbaatar in Mongolia, of all places. Yeah, I know. All right. So all of this, let me know, and you're going to join my club. So hopefully, guys, you get it. You want to be part of the journey. Look forward to seeing you all. Everyone else, thank you all for being on the webinar. Really appreciate it. Oh, oh, look, it's all gone dark. I've got so much light on. It's so dark on here. Sorry, guys. I don't know why my hair's like that. Thank you, guys, for being part of this. Oh, by the way, a few trophies over my shoulder. One day, for those of you who can make out what that is, I'll explain later. I should not be in view. Thank you all very much for being on the webinar. Really appreciate it. I'm going to go home now. I've been in the office too late, and I'm going to let my staff go. You guys can get going. The Dow one. Yeah, you knew I was talking about the Dow. My assistant, I've just been talking to her about the Dow, because obviously the Dow we had to go double down on because it fell so much. I'll tell you which ones we've doubled down on right now. The Dow, the FTSE, these are all shorts. Euros were long against sterling. Facebook, I think I told you, and Disney, I told you as well, they're short. Now you might say, well, wait a minute, Facebook and Dow, they're going to be highly correlated, aren't they? You're right. So we are mindful of that. Google has been falling off a bloody cliff, as you can see, and I'm going to show you that because I've not shown you that all day. And Louise is screaming at me. She said, why did you not show us Google? Sorry, Louise. There we go. Oops. Screen share. There we go. I've got to show you the Google one. I've got to show the Google people. Come on. There it is. That's the Google one. So the short signal came on the 29th of July. As you can see there, there's the arrow. Came at 1235. So 1235 was the price, $1,235. Okay, I'm long Google, don't forget. So I'm happy to short it at any time to make profits from falls because it hedges. It's then fallen. Then we had this massive gap, and now it's at 1151. So it's gone down, what, about $1,000? Not $1,000, $100? Yeah, roughly over $100 a share. I cannot begin to tell you how much money that is, which is fantastic. Okay, it's had a mini crash, which is great because I've got my long-term holdings from now until forever. They're safe. They're all paid for. This short trade made that long-term holding free. Got it? The algorithm told me, because otherwise I'd have to look at this manually, told me go short here. Now look at how much time I had. All good algorithms. No, 30 minute, Jeremy. 30 minute. All good trading strategies should give you ample time to go short. Look at this one. From when we got the signal, which was on the 29th of July at 5:30, till when it actually fell away from the signal was 5 o'clock on the 30th. So there was one whole day in which the signal was near the price. You had a whole day in which to place the trade, a whole day, not 3 in the morning. Oh my God. Oh, 3 in the morning. It was a whole day in which you could have placed that. And then it fell. Didn't fall for ages. Kept going, but we still had this. Then it fell away, and then it really crashed. Now, was there some kind of algorithmic pattern recognition going on beforehand? Yes, probably. Was there the price closing near the lows? Yes. Multiple indicators? Yes. Multiple timeframes? Yes. Price confirmation, artificial intelligence, pattern recognition? Yes. Okay, it was all those things. Computers, algorithms, they're running the show. I could not have given this webinar a year ago, 10 years ago. All right. Anyway, listen, I'm going to have to go now because I've got a bunch of apprentices already email me saying, get on with it. If this is what money's being made, let's get on with it. I like that, Sean. Sean said, if this is being made, can you bloody get off? No, Harish. It's version 4 still. Version 4. So can you get off the bloody webinar? Yes. All right. I'm coming. All right, everyone. Thanks very much. I'm going to go. Love you all, especially the apprentices. I will see you shortly, apprentices, on the other side. Really appreciate it. Thanks, guys. Thanks very much.